When will I understand technology? Okay. Yes, PGP question number 1. For those who did not see it on YouTube, please look at yourself. Follow that. Let's go. Yes, basically what is happening is we are into the first question of PGBP. We are trying to understand what will happen. The question comes and says you are a manufacturing entity, so we are trying to understand the normal and additional depreciations. In that we have come and said, boss, the assets in the first opening WDV, will you get additional depreciation? Will you get additional depreciation? No, you will not get an additional depreciation, you will get normal depreciation. Coming to machinery purchased on 1st September, you will get additional depreciation because facts does not say anything else. Facts do not say anything else, so you will get normal plus additional depreciation. When it comes to 1st December, they are coming and saying you are getting normal only because it is installed in office. Fourth one, they are coming and saying, boss, this is also installed in office, so you will only get normal. For the first one, depreciation rate is 15 into 50% you do, into 15% you do. Computer is going into 40. What I'm trying to tell is there are two blocks. Apart from that, somewhere in the question they've come and said 10 lakhs you claimed last year, only 10% of that you claimed last year, so currently you have to claim the balance. How many blocks do we have to create? One is plant and machinery, one is computers. What is the format? Start from opening WDB, number is 20, computer is 0, add additions, first more than 180, number is, read the question people, 10, computer 0, less than 180, number is 8, 4, total it up. Do you have any sale value? No, you don't have any sale value, therefore it becomes 38, 4, then you will claim depreciation on each item. Yes, sir. Yes, sir. First claim normal depreciation. First item 20 plus 10 will become 30. 30 Kamala you will claim 15%. Number is 4.5. Yes, 4.5. Then less than 180 days you have 8 into 7.5 is 0.6. Computers more than 180 is not there. Opening is also not there. Less than 180 alone is there. Less than 180 is 4. 4 into 40% will give 1.6. So, then you have additional depreciation. In additional depreciation, you can claim it for only more than 180 days. 10 is there. 10 into 20%. Number is 2. Less than 180 days. Do you have any? No. You don't have any. Then carry forward from earlier year. 10 lakhs is the cost. 10% is the depreciation last year. Balance 10% claim in the current year. Number becomes 1. Correct? Yes, sir. Right. 4 into 20% is how much? 0.8. My mistake, sorry. 4 into 20% is 0.8. So therefore you will have what? Additional depreciation is 2 and 1 alone. 2 and 1 alone. Total it up 4.5, 5.1, 7.1, 8.1. Right side it is 0.8. Hatched. Hatched for everyone. Yes, can we go to the next question? Yes. Mr. Gama is a proprietor starting a business of manufacture of tires and tubes for the motor vehicles on 1st January 2022. Your previous year, previous. Previous year, manufacture of tires. You are into manufacturing setup. The manufacturing unit was set up on 1st May 2022. Your previous year, previous. He commences manufacturing operations 1st June 2022. Total cost of plant and machinery is given as 120 crores. The said plant and machinery included second-hand machinery bought for 20 crores and new plant and machinery for scientific research amounting to 15 crores. Totally he purchased 120. In that 120, 20 crores is second hand, 15 is scientific research. You are required to compute the depreciation allowable under 32 in respect of 23-24, assuming that all the assets were purchased by account paycheck and Gamma is not opted for 115 PSC. Let's split the asset first. Your total asset was 120. In that 20 became second hand, 15 became scientific research. They're asking you depreciation or total deduction. Depreciation. They're asking depreciation, meaning this I will ignore. Ignore. What is 20 rupees is second hand machinery. You will only be eligible for normal depreciation into 15% number is 3 lakhs. What is the balance assets which are first hand machinery and eligible for additional? It is 120 minus 20, 100 minus 15, it is 85. 85 you will get depreciation of 15% for normal and 20% for additional. Number total normal is 12.75. Additional is 17, no? 17. So 17 plus 12.75 plus 3 number is done. Question number 3. Mr. A commenced the operations of setting up a warehousing facility for the storage of food grains. You are into investment allowance. Sugar. Allowed, not allowed? Allowed. Edible oil? Not allowed. You have 3 kinds of businesses. Food grains allowed, sugar allowed, edible oil not allowed. What will you do for edible oil? Give depreciations. Give depreciations. He incurred capital expenditure of 80 lakhs, 60 lakhs and 50 lakhs for each of these places for purchasing land and building. And capitalize the same in the books of accounts. The cost of land included in the above figures are 50, 40 and 30. 50, 40 and 30. Out of 80, 50 is land, which means 30 is building. Out of 60, 40 is land, therefore 20 is building. Out of 50, 30 is land, therefore 20 is building. Why am I excluding land? You are not allowed for any kind of deduction or depreciation when it pertains to land. Further, during the previous year, he incurred capital expenditure of 20, 15 and 10 pertaining to buildings. Fully pertaining to buildings, therefore no problem. Correct? 20, 15 and 10 lakhs. The profits from the business are given to you as under. For food grains, it is 16 lakhs. For sugar, it is 14 lakhs. And for edible oil, it is 31 lakhs. Yes. So profits are given to you. 16 lakhs, 14 lakhs, 31 lakhs. Okay. You're required to compute the income under the head PGBP for the assessment year 23-24 and the losses to be carried forward, assuming all conditions are satisfied. And he has not claimed any Chapter 6A. All assume as expenditure is made in account paycheck or through ECS. First one. 16 lakhs is your profit. Buildings cost is 30 and 20. Can you claim the full building cost? Yes, it is a 3580 business. 3580 business, all capital expenditures allowed as reduction. So 30 plus 20 is 50. 50 minus 16 will come 34. 34 is profit loss. Then 14 lakhs is your profit. Buildings cost is 20 plus 15. 35. 35 minus 14 is 21. 21 is losses. This is 1 lakh profit. This is edible oil. You can only claim depreciation. 30 lakhs is your cost. Into 10% will give you 3 lakh rupees. Therefore, it becomes 28 lakhs profit. Careful about the question, people. Okay. The last one was an edible oil. Clearly, we itself discussed that it is eligible only for depreciation. Numbers on the board are your building cost. So you need to claim depreciation at the rate of 10%. 30 lakhs into 10% will give you 3 lakh rupees. 31 minus 3 lakhs becomes 28 lakh rupees. Question to you. Can you set off these two losses against 28? Can you set off these two losses against 28? By specified business losses can only be set off against specified business income. What will you do? Total these two, it becomes 65 lakhs. 55 lakhs. 55 lakhs will be carried forward to future years. For how many years? Infinitely. Will be carried forward infinitely. Current year PGBP is how much? Current year PGBP is how much? Full 28 lakhs. Current year profits and gains is 28 lakhs. Amount to be carried forward is 55 lakhs. Here. Everyone. Yes. Sting la. Doubt படிச்சிட்டு வந்தீங்களா? Worries, no worries. The only place you can make mistakes is in classroom. Yes. Can we go to the next question? X Limited is contributing 20% of the basic salary to the account of each employee under pension scheme. Referred to in section 80 CCD. Dearness allowance is given as 40% of salary and it forms part of the employees, meaning it is forming part. You're required to compute the deduction allowable under 3615A, 3614A. The basic salary is given as 10 lakh rupees. What would be the disallowance attracted and if so, what extent? Basically, you are contributing to NPS. Provisions come and say that if you're contributing to NPS, employer can contribute maximum what is allowed in 80 CCD. Maximum what is allowed in 80 CCD. 80 CCD allows only 10% of salary. 10% of salary, meaning 10% of basic plus DA forming part. Yes, sir. Yes, sir. Here he is contributing how much? 20% of basic. Contributing 20% of basic. We are allowed 10% of basic plus DA. Basic plus DA. Whatever he cannot contribute, that will become disallowance. So let's understand. What is my basic? 10 lakh rupees. 20% of that becomes 2 lakh rupees. So he is contributing 2 lakhs. How much can I claim a deduction? I can claim 10% of basic plus DA. Basic is how much? 10 lakhs. DA is how much? 40%. Total is how much? 14 lakhs. 10% of 14 lakhs becomes 1.4 lakhs. I can contribute 1.4 lakhs. I have contributed 2 lakhs on behalf of the employee. I will get a deduction of only 1.4 lakhs. How much will I not be allowed? This will become a disallowance under section 40A9. Wait for questions. Shall we? During the financial year 22-23, the following payments expenditures were made incurred by the non-residents whose turnover is 99 lakhs. Your previous year, previous year turnover is given as 99 lakhs for you. Why are they giving this? Because we are into TDS question now. For those who recall a little bit of TDS, if not, we'll discuss it later. For those who recall a little bit of TDS, they come and say, boss, if your turnover for the last year does not exceed more than 1 crore, in cases of business, hijack will not be applicable. Meaning 194H, I, J, A, C, and R. Current amendment R. Hijacker is not allowed for it. Okay? So we need to understand which section is applicable and base that deduction on. Understand our disallowances. First one, interest of 45,000 was paid to Rahman and Co., a resident partnership firm, without deduction of tax at the source. Section number 194. A. Interest is 194A. 194A is covered under your hijacker cases, meaning were you required to do deduction? No, you were not even required to do deduction. If no requirement was there, will you disallow something? No disallowance. Hey Rahul, what are we doing? Don't worry. When we'll discuss TDS, we'll do it. Again. As of now, this is what the answer is. Okay. Next one. 3 lakhs was paid as salary to non-resident individual without deduction of tax. So salary is under section 192. Is it covered under hijacker? No. Are you required to deduct TDS? Yes. Did you deduct TDS? Which means disallowance will be 30%. Resident given, so therefore 30% number is. Commission of 16,000 was paid to Mr. Vidyasagar on 2nd July 2022 without deduction of tax at source. Commission comes under 194H. Hijacker covered, not covered? Covered. Deduction mandatory, not mandatory? Not mandatory. Disallowance will come, not come. Amount to be disallowed. Okay. No disallowance. Briefly discuss whether any disallowance arises under the above provisions under 40IA, assuming that all the pays in the above cases have not paid the tax which is required under the Income Tax Act. Two disallowances, one is 30%. Sorry, two no disallowances, one is 30%. Shall we? Ignoring the next one, we need to discuss that here. Question number 7 also ignored. Question number 8 also ignored. Let's discuss question number 9. You are required to discuss the tax treatment of the following transactions while computing the PGBP or profession. First item, construction of school building in compliance with CSR activities, 5,60,000. Allowed, disallowed? Disallowed. Why? Not for the purpose of business. Purchase of building for the purpose of specified business of setting up and warehousing facility for the storage of food gains amounting to 4,50,000. Amount. Full 4,50,000. 100% reduction is allowed. Interest on loan paid to Mr. X, resident of 50,000 rupees, on which tax has not been deducted. The sale of the last year is 202 lakhs. X has not paid tax if any on such statement. Last year turnover is more than 1 crore rupees. You were supposed to deduct TDS under 194. A. Did not deduct TDS under 194A. Disallowance will be number 15,000. Commodities transaction tax paid of 20,000 on sale of bullion, CDT and all fully allowed. Provision made on the basis of actual valuation of payment of gratuity 5 lakh rupees. However, no payment on account of gratuity was made before the due date of return filing. Why? Section 43B. Section 43B. Any kind of payment. Hey, Adam, question says before the due date of filing. Ask yourself two questions. Is it the payment to be made before due date of return filing, or is it the TDS to be paid before the due date of return filing? If payment itself is said, it means it is 43B. If TDS itself is said, it is 30%. Clear? Shortcut methods. Purchase of oilseeds of 50,000 in cash from a farmer on a banking day. Allowed, not allowed? Allowed. Why? Farmer. Payment is happening to a farmer, therefore you don't have a problem. You can claim the whole thing. Tax on non-monetary purposes provided to employee, fully disallowed. If you bear any kind of tax on the non-monetary purposes, it becomes exempt in the hands of employees and disallowance in the hands of employer. Payment of 50,000 by using credit card for fire insurance. Allowed, not allowed? Why? Permissible modes. Credit card is a part of your permissible modes. Credit card, debit card, IMPS, NEFT, RTGS, all are covered. Salary payment of 4 lakh rupees to Mr. X outside India by a company without deduction of tax, assuming Mr. X has not paid the tax on such income. You did not deduct TDS on salaries. Person is a non-resident. Amount disallowable. 100% gone. Okay. Payment is made in cash of 30,000 rupees to transport operator in a day for carriage of goods. 35,000 is the limit. STT paid in a recognized stock exchange by a dealer in shares and securities, fully allowed. STT not allowed only for CGs. STT allowed fully for PGBP. When a person is following mercantile system of accounting, an expenditure of 25,000 has been allowed on accrual basis. In a later year, in respect of the sex expenditure, assessee makes the payment of 25,000 through crossed check. Current year he booked it as an expense. Next year he made the payment by crossed check. Allowed, not allowed? What will you do? Add back. It is not a disallowance, it is an addition. Mediclaim premium paid to GIC by Mr. Lomesh for his employees by a draft on 27th December. Allowed, not allowed? Allowed. Fully expenditure for business. Expenditure incurred under voluntary retirement scheme. Allowed. Some stocks were omitted to be included in both opening stock and closing stock, the value of which are given to you. What do? You forgot to have a opening stock of 9,000 rupees. If you include the 9,000 today, will your profit come down, go up? Come down. You forgot to add closing stock of 18,000 rupees. Will your profit come down, go up? Go up. 9,000 will bring down, 18,000 will come up, net up. 9,000 should be increased. Okay, this is not tax, so this is accounts. Okay, mistake in accounts, first to correct your accounts, then come to tax. Okay. Loss on sale of shares, 8,100 rupees, short term in nature. Short-term capital losses will be set off only against capital gains. Not capital gains. Short-term capital loss can only be set off against capital gains. We are in PGBP right now. We are in PGBP right now. For the purpose of PGBP, ignore. Okay. Income from UTI, dividend from domestic company. Take to IFOS. Claim. The question is, what will you do under PGBP? Under PGBP, what will you do? You'll reduce it off. Salary of 10,000 paid to his brother, which is unreasonable to the extent of 2,000 rupees. How much? Depreciation debited to one P&L, 1,05,000. Accounts depreciation is nonsense. Fully. Written down value of the machinery is given as 4,20,000 rupees. A new plant falling under the same block of depreciation was bought on 1st July for 70,000 rupees. 2 old plants were sold for 50,000 rupees. Nothing is given about manufacturing, assuming no additional depreciation. Opening WDV is given as 4,20,000 at the rate of 15%. Then new plant and machinery is taken for 1,700. So full depreciation. So 70,000 into 15%. Yes or no? 2 plants were sold on 1st October, 50,000 rupees. What will you do? This is sale value. This is sale value directly reduced from your opening block. So 4,20,000 will now become 3,70,000. Shortcut, you can directly total both. It becomes 4,40,000 into 15%. Number is 66,000. You will disallow 1,05,000. You will allow 66,000. Yes. GST liability of 3,400 is paid on 7th April 2023. etc. What to do? What allowed fully as a deduction. Tax is paid can be paid up to the due date of return filing of income. Due date of return filing is 31st October 23. You have paid it on 7th April 23, which means it is within your previous year. It is within your within your assessment year. It is within your assessment year, will be fully allowed as a deduction. No excuse. 2,000 paid as donation to public charitable trust. Public charitable trust 2,000. Disallowed, not for the purpose of business. SGST penalty 5,000 rupees. Why? Penalty. Income from agriculture 1,80,000. Income from agriculture 1,80,000. What to do under PGBP? Reduce. Why? Exempt income subject to partial integration. 4,000 per month was paid as salary to staff throughout the year, and this has not been recorded in the books of accounts. What to do? Hey, you forgot to include, now include all of them. Missed to account and expense, go ahead and account it now, no problem. Okay. Housing loan principal repaid during the year 50,000 rupees relates to residential house property acquired in 21-22 for self-occupation. Interest on loan is 23,000. Housing loan was taken from Canara Bank. These amounts are not dealt in the profit and loss account. What will you do? What will you do? Do nothing. Do nothing. Where are you? You are in PGBP. These are all ATC and IFHP. What do you do in PGBP? Because question itself says they have not dealt with. Abhina P&L, it is not there. If it is not there in P&L already, why do you bother about it? If it is there in P&L, what will you do? You will decide. Right now it is not even there in the P&L. Don't bother about it so much. Adan sonnalla, addition and disallowance, there is a difference. Be careful about what is it. Where are we? Late filing fees of 5,000 rupees paid under section 234F for delay in return filings. I told you in ICI comes and says you should disallow. Repairs of 1 lakh rupees incurred for a building for a new room which was debited to P&L account. Depreciation as per income taxes 7,17,000 rupees. Different questions, ma. My mistake. My mistake. Two different questions. What do you do for the repairs? The capital expenditure. It says new room. It says new room. It's a capital expenditure. You will disallow the whole 1 lakh rupees. You will disallow the whole 1 lakh rupees. Depreciation as per income tax is given as 7,17,000. What I'm trying to ask you is, should you claim the depreciation on 1 lakh rupees in that 7,17,000 or is it already there inside? It is already there inside. It is already there inside. Please read the question. It says depreciation as per income tax act, meaning they would have already factored this inside into the depreciation. Therefore, you don't have to additionally factor it inside. The only depreciation you will claim is 7,17,000. The only depreciation you will claim is 7,17,000. Understand, people, it says very clearly the depreciation as per income tax is given. Every kind of adjustment is already taken up. Every kind of adjustment is already taken up, meaning 1 lakh rupees is also taken up. Yes or no? Do we have to do it additionally again? We don't have to do it additionally. Clear? Clear? Yes. Furniture business shut down in the year 2020 as accountant absconded with the cash of 5 lakh rupees and fully allowed in that year. Fully allowed in that year. Unabsorbed business loss of the furniture business is given as 3 lakh rupees. 4 lakhs was received as insurance compensation for cash theft. Read the transaction, understand what is happening. Huh? You had a furniture business in the past where someone absconded with cash and you claimed it fully as an expense. You claimed it fully as an expense. How much did you claim? Today, how much have you got? Which means earlier you claimed 5 lakhs, now you have got an income. How much should you offer to tax? Full 4 lakhs. Full 4 lakhs should be offered as taxes. Now, what happened to this 3 lakh rupees? It's an unabsorbed business loss. If you 4 lakhs is the only profit which you have, reduce it from that. It's an unabsorbed business loss. If you have not utilized your 4 lakh rupees, this is the only PGBP income in the current year, claim that as a deduction. Set off of losses. Okay. Receive 47,000 a share of profit from AOP where all the members are individual and which is paid tax by normal rates. You put in the question. Who pay tax? Who pay tax? What to do? To do. Question is what to do? Nothing, no? I'm gonna keep waiting. You see, this is the problem. This is the problem. Imagine this is exam. What are you doing right now? How much marks will this carry? Huh? 1 mark. How much time do you have for this? 1 minute you have. Already 3. Already. What are you doing right now? Wasting time. Wasting time, losing marks on the other question. Andanale sonna. Enna sonna? Andanale sonna. There are only 2 rules in my class. There are only 2 rules in my class. If you don't understand the question, if you don't understand the question, what will you do? What will you do? Huh? Exempt, close the answer. முன்னாடியே சொன்னேனா இல்லையா? Did you know what is happening in the question? உனக்கு புரிஞ்சதா question என்ன சொல்றது? Did you even understand what is happening in the question? அப்புறம் என்னத்துக்கு டைம் வேஸ்ட்? This is final level question. The final level question. Final level question. Why did you give it an inter, Rahul? It came in your exam. புரியல. முன்னாடி உனக்கு ஆன்சர் பண்ண முடியலன்னா I don't know. This adjustment is a final level question. Adjustment is a final level question. Should not have been tested for your exam, but one of the exams, I think it was May 20, I think May 20 or May 21, I think. One of those exams, they put it up as a question. They put it up as in, what did you people do? Same thing. Hey, you don't have time. Time is a luxury. Time is a luxury. Don't sit and break your head into things which you did not even teach. Did I teach you this? அப்புறம் எப்படி உனக்கு தெரியும்? சொல்லி தந்தாதானே புரியும். சொல்லியே தரலன்னா எப்படி புரியும் உங்களுக்கு? What were you imagining? You'll suddenly become Nirmala Sitharaman and prepare the provision? இல்ல திடீர்னு she'll come and bless your head and come and say, இதான் answer. What were you thinking? Why waste time, people? Please understand. I've been telling it last time also. This is not the luxury time you have. The reason I was waiting is because I wanted to see what will someone do. It doesn't matter. It doesn't matter. I was waiting for at least one wrong answer. You tell me a wrong answer, we'll go to the next one. But what are you people doing? Sitting and wasting time, thinking something will come in your head. I told you first goal வந்துச்சுனா வந்துச்சு இல்லனா வராது அவ்வளவுதான். இது நீ எவ்வளவு வேணா ட்ரை பண்ணிக்கோ. I could have wasted for another half an hour also. You would still not get the answer. ஏன்னா உனக்கே தெரியாது. படிச்சா தானே புரியும். Sorry. The reason it is there in this is only for you to test and understand where you are mistaking. Why exactly are you taking attempts? This is the reason. This is the only reason you're taking attempts. If someone is not completing their paper in their exam, that is the only reason is this one. That's all. Questions like this is where you go for a toss. You don't know something, you're sitting and wasting time on it. Where is the use on it? We have only 5 hours today, 2 to 7. If I sit and waste half an hour on this, where will you do the balance portion? You want to have that kind of luxury? Give an answer, close and go. No, that's all. Yes or no? There is only 2 ways, ma. Either you tax it or you exempt it. Either way works. Either way works. I say exam, they came and said, I know it is out of syllabus. Both the answers are right. Both the answers are right. Either you could have taxed it or you could have exempted it. But you only had half a minute to do that. So you either had to do 2 options. Only one. Either you add or you reduce. That's all. ரெண்டுமே பண்ணாம சும்மா உட்காந்துட்டு ஒன்னும் ஆக போறது இல்ல. Please gear up, people. Don't make that kind of mistakes. Okay, take a chance. Take a chance. I told you that day itself. Have guts first of all. Okay, stand in the class. Have guts to tell me a wrong answer. It's okay. The only place you can make a mistake is in classes. Make that kind of guts. It's okay. Make a wrong answer. I'm there for that only. No, அதுக்காக தான் நான் வந்திருக்கேன். இல்லைன்னா நீங்களே படிச்சிருப்பீங்க. Yes or no? Mr. Rangamanar resides in Delhi. As per the new rules in the city, private cars can be plied in the city only on alternative days. He has purchased a car on 21st September 2022 for the purpose of his business. The cost of the car is given as 12 lakh rupees. Delhi GST is 14%. Central GST is 14%. Total price of the car is given as 15 lakh 36,000 rupees. He estimates that the usage of the car for personal purpose will also be there, which is 25%. He is advised that since the car has run only on alternative days, only half the depreciation can be claimed since the asset becomes less than 180 days of use. The asset becomes 180 days of use. You are required to determine the depreciation allowable on the car for the assessment year 23-24 if this is the only asset in the block. Rate of depreciation can be claimed as 15%. If the asset were to be used in the assessment year 24-25 also in the same terms and conditions, what will be the depreciation allowed? Assuming there is no change in the legal position. Question number 1. How much is the depreciation you can claim in current year? Rate. The rate 15, 7.5. Buy. When did you purchase? When did you purchase? Full depreciation or depreciation? Adam சொல்றாலே, he only used it on alternative days. From the rate of first put to use. I told you depreciation is allowable from the date on which the asset is first put to use. The asset was first put to use on 21st September. After that, I don't care how many days you use it. After that, I don't care how many days you use it. You will get depreciation for full rate. Depreciation for full rate. Number is what? How did you get it? 15 of what? Why did you take 15, not 12? Just telling you it's not clean. Yeah, ICI. I would have loved that kind of assumption if you were the president of ICI. Unfortunately, you are not. That is one other mistake he made, but I'm just trying to understand the cost first. Right. What is the cost of the car? Buy. Buy. Sorry? Where is it given he's indulged in other business? இந்த ஏண்டா வீட்டுல ஒரு உலா இருந்தாதான் ஆகும், இல்ல ஆகாது. What is the provisions? I don't know GST. What is the provisions in GST? Section 18, 17, 17, 18, 17, block credit 17, is it? 17. What are the provisions? 13% percentage. If it's a motor car for more than 13 passengers, you're eligible for full credit. If not, you're not eligible for full credit. Provided it is not used for further supply. Even if it is for less than 13%, if it is for further supply, you are eligible. அப்படிதானே? எனக்கு தெரியாதுடா. நீ தான் சொன்ன, நீ தான் எக்ஸாம் எழுதுறீங்க, நானா எழுதுறேன். இருக்கா போர்ஷன்ஸ்ல? இன்டைரக்ட் டாக்ஸ் இருக்கா சிலபஸ்க்கு ஃபர்ஸ்ட்? இருக்கா? தெரியலையே. சரி, ஓகே. Whatever it is, the provision basically comes and says if it's a motor car with more than 13% capacity, you are eligible for ITC. If not, you're not eligible for ITC. But there also there is an exception saying if it is used for further supply, you can still claim ITC on that also. Question does not clarify anything. Meaning the answer can be both the ways. You have to give your proper assumption. When I say proper assumption, don't just say 15,36,000. Why 15,36,000 is the question. உனக்கு அதுக்கு தான் மார்க். No one is asking you to judge. Okay, don't judge and stand there and say I will say 15,36,000. நீ யார் சொல்றது? That can only be done if you are the president of ICI. Today you are not, unfortunately. Okay, so if you are taking a number, please make sure you give your right assumptions. In this, let's make an assumption that it is 15,36,000. Let's make an assumption it is 15,36,000. Cost of the car is 15,36,000. Allowed depreciation is percentage, ma. 15%. Number is 2,20,400. It's full 15%. Then you're not right. Question says that you have used 25% for personal purposes. Reduce 25%. 1,72,800. This is your depreciation for assessment year 23-24. Second part of the question comes and says, I also want to know the depreciation for 24-25. Question to you. Closing WDV of the current year will be 1536 minus 1,72,000, or will it be 1536 minus that 2,30,000? Why? Right? Depreciation should be allowed fully. When you're computing the block for the next year, should you not take the full 15%? Should you not reduce the full 15%? சும்மா படிக்கலையா என்ன படிச்சோம் we discussed that when it comes to the block of the next year, we should take depreciation actually allowed under Income Tax Act. How much have you actually allowed? Only 1,70,000. You have not allowed the 2,30,000. You have only allowed 1,70,000. Somewhere there is a mistake in the act. Somewhere there is a mistake in the act, because of which you are getting the depreciation of the full 15 lakhs over the years. Somewhere there is a mistake in the act. ICAI also recognizes that mistake. So you will only reduce 1,72,800. Number is 1363,200 is your block for the next year. On this, you will allow depreciation of 15%. Yes or no? Yes or no? No. You will again allow only 75% of 15%. Because next year also it is personal in nature. Number is 153, 360. Next year, the closing block will be 12 lakh 9,000. Clear? Clear? Yes. With this, we are done with PGBP also. Good with PGBP? Feeling a little confident? We have comprehensive questions to do, full-fledged questions when we do. We'll come back to PGBP at that time. That time I'll understand. That time I will understand how much confident you are. Prepare until then. Okay? This comprehensive questions will probably hit your head next week. Next week. Most likely next week. Basically, today, if we are done with capital gains, tomorrow we'll be doing some miscellaneous chapters. Over the course of next week, we'll be doing TDS, return filing, and the comprehensive questions. Okay, this is when your November 23 friends will also be, your May 23 full course students will be joining you. May 23 full course students will be joining you. We'll be doing it a little slower. Okay, we'll not go in a very hard-paid manner because we need to understand for them also. So therefore, it will go over the next full week. Okay, so you'll be joining me on the morning slots most likely, which means that 7 to 9:30 slot. Mostly morning slot 7 to 9:30. But yes, if I feel bored, then we'll do it in the weekends. My choice. Okay, we'll see how it works out. We'll see how it works out. But you have a good amount of time. Please prepare. Please prepare. Don't make that kind of mistakes. Okay. Yes, comprehensive questions. If you don't know PGBP, not coming only. Definitely not happening. Okay, so please prepare your PGBP once again. It looks like you're not ready right now. Prepare it once again. Okay. Exam Yes. Completing the small parts of PGBP which we left off. We are into one special provision for partnerships. We are into one special provisions for partnership before we get into the theory parts. Okay. So one special provision for partnership, they are basically coming and saying generally from ICAI inter perspective, only individuals are allowed. Only individuals are tested, but there is only one special provision when it comes to partnership firms. 4 or 5 attempts once they come. 4 or 5 attempts once they'll come. Not so important, but still, since they're in syllabus, let me complete my duty to you. Okay. The provision basically comes and says that whenever you are a partner in a partnership firm, who are you? You are in a partnership firm. You have 3 kinds of remuneration which you get from the partnership firm. One is your share of profit. The other is your salary. The third is your interest. Third is your interest. 3 items which you get from your partnership firm. When it comes to share of profit, income tax comes and says whatever share of profit you get from the partnership firm is exempt from tax. Is exempt from tax. Where have you discussed this? It will go under second last chapter in my book, which talks about income which does not form part of total income. There you come and discuss section 10(2)(a). Section 10(2)(a) comes and says any kind of profits received from the partnership firm will be exempt from taxes. What if you receive a loss? What if you receive a loss from the partnership firm? What did I tell just now? If profit is exempt, loss is also logic only. Logic only. If the profit is exempt, the loss also becomes exempt. Guys, if I ask a question, 30 seconds, that's all. அதுக்கு மேல லேட் எடுத்தீங்கன்னா attempt மாறிடும். தேவையா? தேவையா? Give an answer. Wrong answers I will correct. Give an attempt. Give an attempt. Okay. So what happens to a share of loss? It becomes exempt from taxes because profit is also exempt. Loss is nothing but negative profit. Correct or not? Loss is nothing but negative profit. So if profit you will ignore, loss also you will ignore. That is how the logic is. Coming to the balance 2. Balance 2 is what? Interest and salaries. Income tax comes and says, boss, if at all a partner is receiving interest from the partnership firm. The partner is receiving interest from the partnership firm. Partnership firm can only claim interest up to 12%. 12% of what? Contribution. 12% of your contribution. If the partner has given 1 lakh rupees as contribution, partnership firm can pay 12% of 1 lakh rupees, which is nothing but 12,000 rupees to partner. What will happen to this 12,000 rupees? It will be taxable in the hands of partner. It will be taxable in the hands of partner. And allowed as deduction in the hands of firm. Allowed as deduction in the hands of firm. I paid 15,000 rupees. Firm paid 15,000. In this, what will happen? They're coming and saying, boss, only 12% can be claimed. Meaning, 3,000 will be disallowed in the hands of firm. Will be disallowed in the hands of firm. Pay under the disallowance is firm. Okay. So if 15,000 is paid by the firm, 3,000 will be disallowed in the hands of the firm. What will happen in the hands of partner? Will you tax the full 15,000? No, because under 3,000 rupees, who's going to pay tax? Firm is going to pay tax. So therefore, partner should be exempt. So the provision comes and says, boss, whatever is allowed as deduction in the hands of firm will be income in the hands of partner. If it is not allowed as deduction in the hands of firm, it is exempt in the hands of partner. So 12% in the hands of firm will become 12% in the hands of partner. If it is disallowed in the hands of firm, it will be exempt in the hands of partners. Clear, not clear? Limit under 40B, interest will be allowed up to a maximum of 12% of the partner's capital and current contribution. If you do not allow it, then it will become not treated as income in the hands of partner. But if you are allowing it as a deduction under PGBP for the firm, it will be taxable as PGBP in the hands of. Clear? Yes, this is when it comes to interest. This is when it comes to interest. When it came to salary, they came and said, boss, income tax will tell you how much salary you can pay. Income tax will tell you how much salary you can pay. You will pay slab rate model. You will pay a slab rate model. Provisions come and say, find out what is the book profit of the firm. Find out what is the book profit of the firm. For the first 3 lakh rupees. For the first 3 lakh rupees, I can pay a salary of 90% of the book profit or 1,50,000 rupees. Whichever is higher. Whichever is higher. Whatever is my book profits, 1,50,000 of the book profit, 1,50,000 or 90% of the book profit, whichever is higher can be the maximum salary which I can pay to my partner. Rahul, today partnership firm has incurred a loss of 60,000 rupees. Salary which I can pay to my partner is. Salary which I can pay to my partner is. 1,50,000. Whichever is higher. Negative 60,000 ka 90% pota negative number varudhu. That or 1,50,000 whichever is higher. So bare minimum you will pay 1 lakh. Question to you, 1,50,000 per partner or full firm? Full firm. 1,50,000 is full firm. It is not per partner. This 1,50,000 has to be divided amongst the partners. 1,50,000 has to be divided amongst the partners. Now, what happens if I earned more than 3 lakh rupees? In that case, for the first 3 lakhs, this rule will apply. For the balance amount, you can pay 60% of book profit. You can pay 60% of book profit. So for example, if your book profit is 9 lakh rupees, how much? 9 lakh rupees. For the first 3 lakh rupees, you will pay 2 lakh 70,000. What is 2 lakh 70? 90% of book profits. 90% of book profits. For the balance 6 lakh rupees, you will pay 60%. Number is 3 lakh 60,000. Total comes as 6 lakh 10,000. If the partnership firm wants to pay 5 lakh rupees, if the partnership firm wants to pay 5 lakh rupees, amount allowed as deduction will be 5 lakhs. If the lakh 30,000. If the partnership firm wants to pay 5 lakh rupees, deduction allowable for partnership firm will be 5 lakh. Partnership firm wants to pay 6 lakh 50,000 rupees. Deduction allowable will be 6 lakh 30. In this case, what will happen? 6 lakh 30 will become taxable in the hands of partner. 20,000 will be disallowed in the hands of firm. Yes or no? Question to you. What is book profits? What is book profits? Book profit is total PGBP. Book profit is total PGBP, ignoring salary paid. What? Total PGBP, ignoring the salary paid. Whatever is your salary you wanted to claim as a deduction, disallow the whole thing. Disallow the whole thing and find out your PGBP. Find out your PGBP. What do you mean by PGBP, people? Net profit minus deductions, add disallowances, reduce exempts, expenses, all those items. All those items. One additional item, you will reduce your unabsorbed depreciation. What will you do? You will reduce your unabsorbed depreciation. Income tax comes and says unabsorbed depreciation should be directly reduced from PGBP first. Should be directly reduced from PGBP first. It is not a part of set-off chapter. It is a part of PGBP chapter. It is a part of PGBP chapter and not a part of your set-off chapter. So you will directly reduce it from your PGBP. Directly reduced from your PGBP. Clear? 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 This is what the provisions are when it comes to forms. Any doubts? No doubts? All clear? Let's understand the question. Rao and Jane, a partnership firm consisting of two partners, reports a net profit of 7 lakh rupees before deduction of the following items. Salary of 20,000 each month payable to two working partners of the firm, which is authorized by the partnership deed. Will you reduce right now? No. You have to now check the book profit. Will you reduce? No. Don't reduce the book amount. Depreciation on plant and machinery computed 1 lakh 50. Allowed, not allowed? Allowed. Question comes and says it is not considered, so now consider. So 7 lakh minus 1 lakh 50 will become 5 lakh 50. Yes or no? Interest on capital at 15% per annum as per the deed of partnership. Amount of capital eligible for interest is 5 lakh rupees. Total interest they are ready as per the deed is 15%. You can only claim. How much is 12%? 60,000. Huh? Will you reduce 60,000 or will you disallow the balance 3%? Will reduce 60,000. Read the question properly. This interest was never claimed itself. Meaning you will reduce the allowable amount. 5 lakh 50 minus 60,000 will become 4 lakh 90,000. Correct? 4 lakh 90,000. Next item. Carry forward loss 50,000. Will you consider or not consider? So, yes or no? No, you will not consider because it is a part of PGBP loss. It's a part of PGBP loss, forms part of a set-off chapter, does not form part of your PGBP chapter. For the purpose of book profit, you will not consider it. So, which means the book profit for you is 4 lakh 90,000. What will you do? For the first 3 lakh rupees, it is 2 lakh 70,000. Balance 1 lakh 90,000 at the rate of 60%. Number is 1 lakh 14,000. Total is 3,84,000. Total salary which you can pay to a partner is only 3,84,000. They are proposing to pay 20,000 each month to two working partners. 20,000 each month to two working partners. Number is 4,80,000. They are proposing to pay 4,80,000. Income tax is saying 3,84,000. You will only allow. They're asking for the book profit of the firm. Book profit of the firm is 4,90,000. Allowable working partner salary is 3,00,000. Here. Yes. Since we are completing the partnership form, let me clarify the golden rules of partnership form also. Golden rules come and say, boss, rule number 1, whatever you want to pay should be authorized by the partnership deed. Whatever you want to pay should be authorized by the partnership deed. Rule number 2, if you are proposing to pay salary, salary should only be paid to working partners. Should only be paid to, cannot be paid to sleeping partners. Cannot be paid to sleeping partners, government partners, etc. Okay, can only be paid to working partners. வேலை பண்றதுக்கு தான் காசு, சும்மா உட்கார்ந்துறதுக்கு காசு இல்ல. Okay, so can only be paid to working partners. Rule number 3, whatever you want to make a change in your partnership deed will only be prospective in nature. Will only be prospective in nature. Retrospective amendments not allowed. Today you cannot come and say, boss, I want to change my salary to 5 crore rupees from 5 years back. You can change it only from 5 crore rupees going forward. Cannot change it earlier. Cannot change it for earlier. Yes. Retrospective effect not allowed. Clear? Yes. This marks the end of your provisions. This marks the end of your provisions. Now we get into something called as a theoretical part of the syllabus. Theory part of the syllabus. Syllabus theory first one, they come and say, boss, who to maintain books of accounts? Maintain books of accounts. We're talking about section 44AA. 44AA. Here is where your PGBP splits. Here is where your PGBP splits. Until now, when we discussed business and profession together. Now what we're going to do, we're going to split our business and profession. We're going to split our business and profession. Provisions are basically coming and saying that, boss, if you are a profession, separate. If you are a business, separate. In profession, they're coming and saying, I want to know whether your gross receipts, I want to know whether your gross receipts is more than 1,50,000 for all the last 3 years. All the last 3 years. Or you're expecting that the current year gross profit will be more than 1,50,000. Or you're expecting that your current gross profit will be more than 1,50,000. I'm not talking about gross profit. I'm talking about gross receipt. I'm talking about gross receipt in very layman terms, turnover. Your turnover for the last 3 years, all the 3 years should be more than 1,50,000, or the current year gross receipt should be expected to be more than 1,50,000. Income tax comes and says, if any of the conditions are satisfied, you are mandatory required to maintain books of accounts. Mandatory required to maintain books of accounts. What books of accounts? I will tell you. Who's I? Income tax will tell you. Income tax will tell you. Think about it. Tell me, what books do you think you should maintain? Cash book, journal, ledger. Purchase bills, sale bills. Then case register. யாருக்கு கேஸ் வந்துச்சு, ஆனா கரெக்டா வரல. Let's start from the top. What and all do you need? யோசிச்சு பாரு. What and all do you need? First of all, you need a cash book. Then you need a journal. You need a ledger. Ledger போட்டாலே trial balance automatic வரும். Balance sheet P&L is a part of schedule 3. I don't care. Then what else do you need? நீ வாங்கினா purchase bills. நீ வித்தா sale bills. Correct or not? These are the bare minimum items you want. These are the bare minimum items you want. Suppose you are into medical profession. What are you into? You will have inventory with you. You will have inventory with you. So they are coming and saying inventory book. What? Inventory book. If you are handling patients, you should have something called as daily case register. You have something called as daily case register. It is not daily cash register. It is daily case register. Clear? Yes, if you are into medical profession and you are handling patients, you should have something called as daily case register. That is what the provisions come and say. Did I miss something? Check. Purchase ku thana adha nanu solren. Done. Yes. I have not satisfied the conditions. I have not satisfied the conditions, meaning either my gross receipts for all the 3 years are not more than 1,50,000 or current year I'm not expecting more than 1,50,000. What to do, Rahul? They are saying maintain books. Saying maintain books, but I will not tell you. Will not tell you. Income tax will not tell you. You take care of whatever books you maintain. You take care of whatever books you maintain. Whatever you feel is right is right. Whatever you feel is right is right. But yes, tomorrow if the assessing officer comes and catches your neck and asks you to prove something, you should have the proof. The provision basically comes and says, maintain sufficient books of accounts which can enable an assessing officer to compute your income. Okay? Sufficient books of accounts which can enable an assessing officer to compute your income. Meaning it is your choice. It is your choice. Nee paathuko. Whatever you want, you take care. Tomorrow, if he catches neck here, you should have the proof for it. You should have the proof for it. Correct? We are done with profession. Coming to business. Provisions are basically coming and saying, boss, first of all, understand whether you are an individual HUF or your others. You are an individual or an HUF or your others. If you are an individual or an HUF, they are coming and saying, if your PGBP income is 2,50,000 or your turnover is 25 lakhs. Correct? If your PGBP income is 2,50,000 and the turnover is 25 lakhs, either of the two conditions satisfied for any of the last 3 years. Any of the last 3 years. There it was all. Now it is any of the last 3 years. If any of the last 3 years your PGBP income goes more than 2,50,000 or your turnover goes more than 25 lakhs, this is for individual and HUF. If you are any other person, the limit is 1,20,000 and 10 lakhs. 1,20,000 and 10 lakhs, meaning PGBP should be more than 1,20,000 and turnover should be more than 10 lakhs. All of the last 3 or any of the last 3? Satisfy any of these conditions. They are coming and saying you should maintain sufficient books of accounts. Maintain sufficient books of accounts. I will not tell you what to maintain, you maintain. I will not tell you what to maintain, you maintain. But they are coming and saying, no, Rahul, these conditions are also not satisfied. These conditions are also not satisfied. Not required to maintain books. Not required to maintain books. You can leave it off. Okay? Leave it off. When we come to presumptive, I'll come and say maintain. Okay? They are coming and saying, do not maintain books of accounts because you're anyway going to become liable for presumptive taxation. You're anyway going to be liable for presumptive taxation. But if you choose to not have presumptive, they will come and say maintain books. Maintain. Okay? But as per the provision, you don't have to maintain books of accounts provided your turnover does not exceed 2,50,000 and 25 lakhs, 1,20,000 and 10 lakhs. Clear? This is for 44. Vinod is a person carrying on a profession as film artist. His gross receipts from the profession are given to you. 1920 is 1,15,000. 2021 is 1,80,000. 21-22 is 2,10,000. You are profession or business? Profession. You are into profession. Are you obligated to maintain books of accounts is the question. Are you obligated to maintain books of accounts? You are obligated to maintain books of accounts. What did I tell you? I will not prescribe the books. That does not change the fact that you don't have to maintain books. The person who cannot maintain books of accounts is only business. Profession mandating books of accounts to be maintained. Just that the prescription will not happen because here it is less than 1,50,000. So what is the answer? It is not 1,50,000 exceeding in financial year 1920. Therefore, books of accounts has to be maintained, but not as per the prescribed 6F. You can maintain as per whatever is convenient to you, to the extent it is enabling the assessing officer to compute the income. Clear? Yes. This is for 44 AA. Coming to 44 AB. This talks about tax audit. Provisions basically come and say if you are into profession and your receipts are more than 50 lakhs. If you are into profession and the receipts are more than 50 lakhs rupees, you mandatory have to do tax audit. If you are into business, and the turnover is more than 1 crore, you mandatory have to do tax audit. But yes, if I find out that your revenue is less than 5% in cash, your receipts, not revenue, sorry, receipts. If your receipts is less than 5% in cash and your expenses is less than 5% in cash, in that scenario, I will increase your turnover to 10 crores. Provisions are coming and saying that your receipts of the current year, the receipts of the current year, at least 95% of the receipts should be received in permissible mode. At least 95 of them should be received in permissible mode. And your expenditure for the current year, at least 95% of that should be received in permissible modes. Both the conditions satisfied, turnover will become 10 crores. If one of the condition also not satisfied, turnover will be. This is what the provisions are. Clear? Read quickly. Done? Done? Understood? Yes. If you are into profession, the turnover limit is 50 lakhs. If you are into business, you need to check whether you are into cashless or cash mode. Cashless meaning what? 5% key. Anything should be less than 5% in receipts or in expenditures. Receipts or in expenditures, it should be less than 5% in permissible modes. What modes? Permissible modes. Turnover will become 10 crores. If not, it will be 1 crore. If not, it will be 1 crore. This is what the provisions come and say. And the provision comes and clarifies that boss, if you are liable for tax audit, due date for return filing will become 31st October. What is it? October. If you're liable for tax audit, due date is 31st October. But the tax audit report has to be submitted 1 month before. 1 month before, meaning 30th September. This is what the provisions are. Okay. This is all your tax audit provisions. Now we are getting into the next part called as presumptive. We're getting into presumptive. There are 3 kinds of presumptives for your exam. Presumptive number 1, which is talking about business. Presumptive number 1 talks about business. They're coming and saying if you are into a business and the business turnover is not more than 2 crores. Business turnover is not more than 2 crores. In that case, I will mandate you to follow presumptive taxation. I will mandate you to follow presumptive taxation. Rates are given as 6% and 8%. 6% and 8%. Rahul, when is it 6%? When is it 8%? They are coming and saying, look at your turnover. Look at your turnover. If your turnover is in permissible modes, your turnover is in permissible modes, and you have received the full turnover before the due date of filing. Before the due date of filing, you will pay 6%. If your turnover is in permissible modes, but you received it after the due date, you will tax it at 8%. If your turnover is not in permissible modes, you will tax it at 8%. That is what the provisions. Okay? So the provisions are coming and saying that if your turnover is less than 2 crore rupees, you are liable for presumptive. In this presumptive, you have 2 rates, 6% and 8%. 6% only when you are getting the turnover in permissible mode and you are getting it before the due date of return filing. Getting it before the due date of return filing, you will tax it at 6%. Elena, you will tax it at 8%. If you find out the number, this number will be called as your PGBP income. What will it be called as? Since this itself is your PGBP income, will you allow depreciation on this? Will you make any disallowance on this? Will you make any allowances on this? None of the deductions will be considered. None of the deductions will be considered. This is your final PGBP income. This is your final PGBP income. No adjustments in the whole chapter will be made. No adjustments in the whole chapter will be made. Second, you are not liable for tax audit. Not liable for tax audit, which means your due date for return filing will now become 31st July. 1st July. Third benefit, they're coming and saying if you are opting for presumptive, your advance tax installment is only 15th March. 1 installment, that's all. You only have 1 installment for advance tax, which is 15th March. If you were not opting for presumptive, you had 4 installments. You had 4 installments. Now it is only 1 installment, which is 15th March. Fourth provision, they're coming and saying, boss, if you opt for presumptive, you need to continue with presumptive for 5 years. To continue with presumptive for 5 years. If you choose to come out of presumptive, next 5 years, I will not let you come into presumptive. Next 5 years, I will not let you come into presumptive. And the last thing they're coming and saying, boss, if you feel like your income is lower than this, your actual PGB income is lower than the 6 and 8%, you can choose to go out of presumptive. But if you're going out of presumptive, you mandatory have to maintain books and mandatory have to get them audited. And mandatory have to get them audited. If you are mandatory getting them audited, due date now becomes 31st. Now, yes, this is what the provisions are when it comes to presumptive taxation for business. Presumptive taxation for business. Coming to presumptive taxation for professionals, they're coming and saying if your turnover is up to 50 lakhs, turnover is up to 50 lakhs, you are liable for presumptive, in which you need to pay PGBP income of 50% of the turnover. Much? The turnover, padi is PGBP income. The turnover, padi is PGBP income. Balance provision same as business. Meaning, will you make any disallowances? Will you make any depreciation? Will you make any allowances? No, none of them will be considered. Are you liable for audit? Are you liable for audit? No. Are you liable for maintaining books? You're not liable for maintaining books. But if you choose to not opt for presumptive, you mandatory have to maintain books, mandatory have to get them audited. If you're not maintaining books, due date is if you are not maintaining books, due date is there is no such rule itself. There is no such rule, is it? If you do not get it audited, due date is 31st. Right? If you get it audited, it is 31st. Open your mind. Hear the question first. Okay? If you're getting it audited, it's 31st October. If you don't get it audited, it's 31st. Yeah. Yes. Last provision is your transport operators. Last provision is your transport operators. Provisions are coming and saying, if at any given point of time during the year, you do not own more than 10 vehicles, 10 vehicles, you will be liable for presumptive. You'll be liable for presumptive. Any one day also it becomes 11 vehicles. Not eligible. Not eligible. If you are any day not liable for 10 vehicles, you will be opting for presumptive. You're opting for presumptive. Provisions are coming and saying you have two kinds of vehicles. One is called as heavy good vehicle, other is called as others. One is called as heavy good vehicle, the other is called as others. Provision comes and says heavy good vehicles meaning any vehicle which has capacity of more than 12 metric tons. Any vehicle with capacity more than 12 metric tons. What is the taxability? You will tax 1,000 rupees per ton per month. 1,000 rupees per ton per month. If you are any kind of other vehicles, it will be 7,500 per month. 7,500 per month. In both the scenarios, it is part thereof also. It is part thereof also, meaning if the vehicle was there for even one day in that month, fully taxable for 7,500 or 1,000 per. Both the provisions are applicable. Both the provisions are applicable. Clear? 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 Question to you. This is per month or part thereof for the number of months the asset was with you, or for number of months the asset was put to use. It is with you. Put to use is not a criteria. Put to use is not a criteria. Even if you had the asset with you today and you put to use the asset 4 months later, taxability will start from today. Taxability will start from today, will not start from the next 4 months. Put to use is only a concept under depreciation. Put to use is only a concept under depreciation. Balance rules follow. Basically, if you're opting for this, no maintaining books, no getting audited. If you don't want to follow this, maintain books and get them audited. If you do not follow this, meaning if you are getting audited, due date is 31st October. If you're getting it audited, it is 31st October. If you're not getting it audited, 31st July. Advance tax installments. Here is an exception. You have to do all the 4. Here is an exception. You have to do all the 4 installments. Second one. Either will you allow any kind of deductions under PGBP? No. Only one deduction is permissible. Only one deduction is permissible. All your salary and interest can be claimed. Salary and interest to whom? Partners. Any kind of interest and salary paid to partners can be claimed as a deduction under 44AE, which is transport operators. Balance 2 you cannot claim. Balance 2 you cannot claim. Here alone you can claim it. So 2 exceptions. 2 difference between the other 3 is here advance tax installments are 4 installments, and here you will get a deduction of interest and salary paid to partners. Clear? Yes. This marks the end of your PGBP. I think only one question I have left for to do. Look at the question. Mr. Sukhwinder is engaged in the business of plying goods carriages. Sukhwinder is engaged in the business of plying goods carriages. On 1st April 2022, he owned 10 trucks, out of which 6 are heavy good vehicles with a capacity of 15,000. Balance 4 are others. On 2nd May 2022, he sold one of the heavy good vehicles and purchased a light good vehicle on 6th May. Has he violated the condition? Has he violated the condition? No. Why? On 2nd May, it became 9 vehicles. On 6th May, it became 10 vehicles again. If it was ulta scenario, then it would have violated. Now it is not violating. Therefore, it is all good. This new vehicle was, however, put to use only on 15th June 2022. Do you care? Not care. Look at the total income. Sukhwinder has a total income of freight charges of 12 lakh 70. Operational expenses are 6 lakh 25. Depreciation is 1 lakh 85. Other office expenses is 15,000. PGBP comes as 4 lakh 45,000 from transport business. From other business, it is 70,000. You are required to check whether which is beneficial. You are required to check whether which is beneficial. Let's do the presumptive. Provisions come and say that there were 10 vehicles. 6 of those vehicles were heavy. 4 of them were light. In this, 5 heavy vehicles you had it throughout the year. Yes or no? 5 heavy vehicles you had throughout the year. 1 heavy vehicle you had it for how many period? How many months? 2 months. By April and May. May, when did you sell? 2nd. 2 days counted. So it becomes 2 months. Yes or no? This is for your heavy good vehicles. Coming to light good vehicles, what have they done? Initially, you had how many light good vehicles? 4. Initially, you had 4 light good vehicles. How many months? Full 12 months. And then you bought a second light good vehicle when? 6th May. So you bought 1 light good vehicle on 6th May, which means how many months? 11 months. On 11 months. With this, you need to compute the PGBP. Yes or no? These all are 15,000. So it is 1,000 per ton. How many tons? 15 tons are there. 1,000 per ton will become 15,000 rupees. So per vehicle will be chargeable at the rate of 15,000 rupees. How many vehicles do you have? 6 vehicles. This vehicle will be 15,000 into 12 plus 15,000 into 2. Correct? No, it is 15,000 into 6 into 12. It is 15,000 into 6 into 12. Per vehicle, 15,000, 5 vehicles. Sorry. 5 vehicles. So 15,000 into 5 into 12 number is 9 lakhs. Right side, 30,000. 30,000. Come to light good vehicles. What is happening in light good vehicles? You are per month eligible for 7,500. So 7,500 into 4 into 12 plus 7,500 into 1 into 11. Correct? Okay, logic purida. Numbers. Total both 42. 4 lakh 42,500. Total all the three. 9 lakh 30,000 plus 4 lakh 42,500 will give you 13 lakh 72,500. Yes. So your total presumptive income is 13 lakh 72,500. Will you compare this 1372 with 4 lakh 45 or 70,000 or total? You will compare this 13 lakh 72 with 4 lakh 45, whichever is lower. Therefore, you will choose to opt for presumptive, not opt for presumptive. If you don't opt for presumptive, your total income will be 4 lakh 45 plus 70,000, which is nothing but 5 lakh 15,000. But if you cannot maintain your books of accounts, you will have to opt for presumptive, in which case it will become 13 lakh 72 plus 70,000, which is 14 lakh 42,500. Your choice. You will give both answers in the exam. Okay. There is a second question in this. Would your answer change if the 2 heavy good vehicles purchased in April were put to use only in July? Why? Put to use is never a criteria. Therefore, the answer will not undergo a change. Done. Exactly 1.5 hours. Shall we? Shall we? What is the next chapter? Before we enter capital gains, I have one chapter to complete for you, which is called as agriculture. The reason I always do it before capital gains is because PGBP and agriculture income are linked to each other. Okay, so let's do. Hey, correct on the. We are into the chapter called as agriculture. Shall we? Shall we? Yes. I think it's page number 180. In my book, it is page number 180. Okay. Okay. Yes. Coming to the chapter called as agriculture income. This chapter is basically coming in clarifying to you that was any kind of agriculture income is liable for state taxes. Is liable for state taxes. Therefore, in income tax, you are not liable for tax on this. You're not liable for tax on this. So, for that to happen, you need to first understand what do you mean by an agriculture income. What do you mean by agriculture? Income tax very simply comes and says, boss, agriculture income is any kind of income which is done on a land. Any kind of income which is done on a land. Read the first line. Any kind of rent or revenue derived from a land. Any kind of rent or revenue derived from a land situated in India. On this land, you should have done agriculture. What is agriculture income? Any kind of revenue derived from agriculture on a land is agriculture. What do you mean by agriculture? I don't know. I don't know. It is not defined also. It is not defined also. Whatever you call as agriculture is agriculture. Whatever you call as agriculture is agriculture. Second, they are coming and saying, Rahul, I am doing agriculture on a land. Doing agriculture on a land. Let's say, for example, I am growing paddy. What am I growing? To make what? Rice. To make rice. Now, what happened is I took the paddy out and the paddy is all dirty. Paddy is all dirty. It has sand and everything on it. So, I'm going to do what? Cleaning. And then I'm going to remove the pesticides. And then I'm going to do some heaving and all those things. Either panname, I cannot sell it in the market. Without doing this, I cannot sell in the market. So for me to do all these activities, will it be called as agriculture? Yes, it will be called as agriculture. Any kind of activities which you do on the crops to ensure that the crops are ready for sale in the market will also be called as agriculture. Will also be called as agriculture. Clear? Clear? Third item they're coming and saying was, if there is an agricultural land and on this land you have a building. This land you have a building. If you give this building to someone for a rent, that is also agriculture. That is also agriculture. As long as you can prove that the building is used for agricultural purposes. As long as you can prove that the building is used for agricultural. Clear? Clear? Yes, question to you. There is a person called A. Owns the land. Who owns the land? He has given this property to B for doing agriculture. For doing agriculture. The rent received by A from B will be taxable as agriculture income. True or false? True or false? True. Any kind of rent received from the land is also treated as agriculture income. First line. Correct? My question is not that. My question is, B did not do the agriculture. B gave it to C. B gave it to C. Now, C is giving rent to B. B is giving rent to A. From C to B, this is agriculture. From C to B, this is agriculture. From B to A, is it agriculture, not agriculture? It is agriculture. It is agriculture. A. Ultimately, land should do agriculture. Ultimately, land should do agriculture. Nadule yar vena inda, it's okay. Nadule yar vena inda, it's okay. Land should do agriculture. That is all the logic is. That is all the clear. Clear? Yes. A had a land. A had a land. Sold it to B. Sold it to B. We learn something called as capital gains. We learn something called as capital gains. Can you treat it as capital gains under agriculture and not tax it, or is it taxable? Sale of agricultural land. Taxable, not taxable. Taxable, not taxable. Not taxable. Not taxable. Capital assets gives a specific exemption. Sale of any kind of rural agricultural land will not be treated as a capital asset. If it is not treated as a capital asset, it is treated as an agriculture income, will become exempt from taxes. Clear, not clear? Clear, clear. Which means you need to now understand what do you mean by a rural agricultural land. What do you mean by a rural agriculture land? Income tax comes and says, boss, I don't know what is a rural agriculture land. I don't know what is a rural agriculture land. I know what is an urban agriculture land, which means I will define what is an urban agriculture land. If the land falls within that area, then it is urban, which means it is taxable. If it does not fall within that, it will become rural. It will become rural. What did they come and say, boss? If the land is situated in a municipal authority, if the land is situated in a municipal area and the municipal area has a population of more than or equal to 10,000 people, population of more than or equal to 10,000 people. For those who are trying to search it in my books, it is in capital gains chapter. Okay, so if at all the population is more than 10,000 people, it will be called as urban. It will be called as urban. If not, it will be called as rural. It will be called as rural. I said, no, Rahul, the land is not in the municipal boundaries. It is not in the municipal boundaries. It is within 2 kilometers of the municipal boundary. Let's say, for example, this is your municipal boundary. Your municipal boundary. The land is within 2 kilometers. 2 kilometers. The land is within 2 kilometers. They came and said, boss, if the land is within 2 kilometers, start from the municipal boundary. Start from the municipal boundary. Also consider the 2 kilometers. Also consider the 2 kilometers. Motto population should not be more than 10,000. Motto population should be more than 10,000. Should be more than 10,000. If it is more than 10,000, it is urban. If not, it is rural. I said, no, Rahul, it is not within 2 kilometers also. Now it is within 6 kilometers. Now it is within 6 kilometers. They came and said 10,000 will become 1 lakh. 10,000 will become 1 lakh. The whole property, meaning starting from here to here to here also. Everything together, if the population is more than 1 lakh, it will be urban. If not, it will be rural. I am not in 6 also. I am now in 8. 8 kilometers. I think this is 10 lakhs, correct? Huh? 10 lakhs, huh? Yes, it is 10 lakhs. So the motto population should be 10 lakhs. If it is more than 10 lakhs, it is urban. If it is less than 10 lakhs, it is Rahul. I am not in 8 also. Not in 8 also. I am a little bit beyond 8. I am a little bit beyond 8. Always a rural. Always rural, never urban. Always rural, never urban. But please do understand, it is from the nearest municipal border. From the nearest municipal border, meaning in the municipal, let's say this is A municipal. This is A municipal. Land is somewhere at 10 kilometers. Land is somewhere at 10 kilometers. But actually what happened, you checked B municipal. You check B municipal. From B municipal, this is actually 2 kilometers. Will you check A or B? You will check B. Check B. From B, you will check it is 2 kilometers. So therefore, you will check for 10,000 limit and not the 10 lakhs. Not the 10 lakhs. Clear? This is what the provision. Second provision. Rahul, here is my land. Here is my land. This is 7 kilometers. Technically, this land is from here. It is 7 kilometers. From here, it is 7 kilometers. But if it was going beyond 8 kilometers, it will become urban. It will become urban. So what I did is I played a trick. I went to the government and I came and said, Rahul, I do not have a straight road. I do not have a straight road. My road is like this. If you travel from road, the distance is 14 kilometers. If you travel from road, the distance is 14 kilometers. Is this land rural or urban? It is still urban. It is still urban. I do not care on the road. I care from air. I do not care from road. I care from air. So from here, if I have a flight, shortest aerial distance will be considered for the purpose of distance. Shortest aerial distance. Right now, nothing floats on the air, so therefore you will go directly. You will go directly. Tomorrow, if the tech happens in such a way that buildings also will be in the middle of the air, provision will change. There is nothing on the air, so therefore you will go directly. Therefore you will go directly, and therefore you will check the shortest aerial distance. Tomorrow, if flying buildings and all start getting created, they will change the provision accordingly. Then they will say underground straight line. Okay. This is what is the provision for your urban and rural. This is what is the provision for urban and rural. Any doubts now? No doubts. This is what is the provision for agriculture income. They're coming and saying you should receive revenue from the land. You should sell the land. You should do agriculture on the land. you should do any process for ensuring that the product is ready for sale, you should have any warehouse on the land. Any of these items will be called as agriculture income. Two conditions. First of all, the land should be rural land and not urban land. If it is urban land, it is taxable. If it is rural land, it is exempt. Rule number 2, land should be in India. Land should be in India. Any agriculture income from foreign countries is fully taxable. It's fully taxable. So the only thing which is exempt from taxes, agriculture income from rural agriculture land situated in India. This is what is the provisions when it comes to agriculture. Second provision, they're coming and saying, Rahul, I am a person who's actually doing agriculture also. I'm doing business also. What am I doing? Agriculture also, business also. Meaning, I am in the manufacturing of tea. In the manufacturing of tea, I have my own land. In that, I will create the tea leaves and then I will manufacture and make the tea, chai patti, seeds, tea seeds, tea seeds. I am doing both agriculture and business. Agriculture and business. In this case, how to understand what is exempt? How to understand what is exempt? Income tax comes and says, I will give you 3 kinds of products. I'll give you 3 kinds of products. Product number 1 is tea. Product number 2 is coffee. Product number 3 is rubber. I'll give you 3 kinds of products. These 3 kinds of products, I will tell you how to compute. These 3 kinds of products, I will tell you how to compute. Balance all products, follow process costing. Follow? Tina? Find product. For a product to create, you do multiple processes. You do multiple processes. From process 1 to process 2, you will do at FMB. Do at FMB. Assuming process 1 is selling the product to process 2 at FMB. That is what the understanding is. We'll discuss that. We'll discuss that. As of now, we are into tea, coffee, and rubber. We are into tea, coffee, and rubber. Provisions come and say, if you are into manufacture of rubber, the provisions are 65-35. The provisions are 65 and 35. 65 and 35. 35 is BGBP or agriculture. Lower of the 2 will be PGBP. Lower of the 2 will be PGBP. 35 will become PGBP. 65 will become agri. Coming to tea, coffee, it says 60-40. 60 is agri. 60 is agri. 40 is PGBP. 40 is PGBP. Coming to coffee, they said split. Okay, split. If it is 2 words, if it is 2 words, it is 25-75. 2 words na exam le rendu vaartha paatha. If it is 2 words, it is 25-75. If it is 4 words, it is 40-60. It is 40-60. What does this 2 word mean? I think the 2 words are grown and curated. Grown and curated. There it is grown, curated, roasted, grinded, grounded, grinded. Grown, curated, grounded, roasted. Faculty kapda. Yes, grown, curated, grounded, and roasted. If you do 4 items, it is 40-60. If you do 2 items, it is 25-75. Do you have to remember the words? No. Exam பொறுத்த வரைக்கும் 2 வார்த்தை வந்தா 25-75, 4 words வந்தா 40-60. Simple word. Examல 4 வார்த்தை பார்த்தா 40 வந்துரும். 4 வார்த்தை பார்த்தா 40 வந்துரும். 4 வார்த்தை பார்க்கல 25 வந்துரும். அவ்வளவுதான், முடிஞ்சு போச்சு. Clear? That is how I remember mine. அதுக்கு மேல எனக்கு ஞாபகம் இருக்காது. I have little only brain. இதுல நான் ஃபைனல் சிலபஸ் போடணும், ஃபாஸ்ட் ட்ராக் போடணும், ஃபுல் கோர்ஸ் போடணும், வராது. சத்தியமா வராது. ஃபார் மீ 4 words and 2 words is what the answer is. Okay, அதுக்காக எக்ஸாம்ல போயிட்டு 4 words 2 words எழுதாதீங்க. Look at the question. Questionல இருக்கிற வார்த்தை அப்படியே காப்பி பேஸ்ட் பண்ணிக்கோங்க. Okay, this is what the provisions are. This is what the provisions are. Whatever is your final income, whatever is your final PGBP income, split it into 40-60. 40 will become PGBP, 60 will become agri. Agree? Yes. Next coming to the balance items. Let's say, for example, you are into manufacturing of sugar. What are you into? Manufacturing of sugar. What will happen? You have process number 1 called as sugarcane cultivation, correct? You have process number 1 called as sugarcane cultivation. Process number 2 is sugar manufacturing. Sugar manufacturing. Assuming both are different people. Assuming both are different people. Let's say, for example, Rahul has a brother. Brother is handling the sugar. I am handling the sugarcane. For me, what will happen? I have the cost of cultivation of sugarcane, correct? So I will have the cost of cultivation of sugarcane. I have the cost of cultivation of sugarcane. My brother comes to me and comes and says, Rahul, give me the sugarcane so that I can make sugar. Give me the sugarcane so that I can make sugar. I will tell him, boss, I'm going to sell it to you. I'm going to sell it to you. What is the best value to sell at? Market value, meaning FMB, meaning FMB. So my cost will be what? Cost of sugarcane manufacturing. Cost of sugarcane manufacturing. What will be my sale value? FMB of what? Sugarcane. FMB of sugarcane. My brother said, okay, boss, you want to give me at FMB? I will buy at FMB. For him, the raw material cost is FMB of sugarcane. On this, what he will do? He will do process cost. So he will do process cost. And then he will sell in the market. He will sell in the market. What will he sell in the market? What will he sell in the market? Sugar. What will he sell in the market? Sugar. So sale value sugar. Should you take FMB? He will itself sell. No, he will know the value. Actual consideration. Okay. So the only thing which you do not know in this question is what is the sale value from sugarcane to sugar? What is the sale value from sugarcane to sugar? Income tax comes and says take the FMB. Take the FMB. The FMB of sugarcane will become the sale value for agriculture business. The FMB of sugarcane will become the cost for the PGBP. This is clear. This is how you did process costing. In the syllabus. I was feeling guilty. The tax only is difficult. Fortunately, everything is going pathetic enough. I am happy. Okay. Yes, this is how it looks like. This is how it looks like. Your FMB of the sugarcane will be treated as the sale value for the agriculture business. Actual cost of cultivation, you already know. That will become your, this FMB will become your cost of acquisition for your PGBP business. You will have further manufacturing cost. This is your actual sale value. You will get your agricultural. You will get your agricultural. Clear? Yes. This is what is the end of PGB. This is the end of agriculture. This is the end of agriculture. Comes the last part of the provisions called as partial integration. Comes the last part of the syllabus called as last part of the chapter called as partial integration. Income tax comes and says, boss, agriculture income is exempt from tax, no doubts. Agriculture income is exempt from tax, no doubt. But technically, it is your business income. Technically, it is your business income. So technically, you should have paid tax on it. Technically, you should have paid tax on it. Because of this agriculture income, your total income fell. Had you taxed this agriculture income, your balance income would be taxable at a higher rate. The balance income would have been taxable at a higher rate. Since you treated this as an agriculture income and exempted it from total income, your total income fell down. Your total income fell down. I will not accept this. I will not accept this. In a very simple terms, what they're basically coming and saying is, let's say, for example, you're into sugarcane business. You're into sugarcane business. In the split to Paname ni Pathinda, your income from sugar fully, your income from sugar fully would have been 10 lakhs. Which? 10 lakhs rupees. Your income from the full sugarcane would have been 10 lakhs. But because of the split, what happened is your agri business is showing 7 lakhs and your normal business is showing 3 lakhs. Technically, your total income is what? Technically, your total income is what? 3 lakhs. Technically, your total income is 3 lakhs. If you follow slab rate model, first 2.5 will become 0. Balance 0.5 will become 5%. Balance 0.5 will become 5%. Yes or no? Yes or no? But the problem is, if you notice, if I had not given this exemption to you, your total income would have been 10 lakhs. Total income would have been 10 lakhs. And this would have been taxable at the rate of 20% have been taxable at the rate of, just because I excluded agriculture income, it is only being taxed at 5%. I'm not okay with that. Not okay with that. What they came and said is, do one thing, boss. Prepare your income chart. Prepare your income chart for the first 2.5 lakhs, which is your basic exemption limit. Your basic exemption limit. Assume this is from your PGBP. Assume this is from your PGBP. Balance after this. Start from agree. How much is your agree income? 7 lakhs. So 2.5 lakhs to 9.5 lakhs. Correct? From 2.5 lakhs to 9.5 lakhs, assume this is your agree income. Assume this is your agree income. Whatever left off will again become your PGP. Whatever difference will become your. In the system level, what will happen? On this, you will pay tax of, on agree income, you will pay tax of 0. But on the 0.5, which is your, you will pay tax at the rate of 20%. Why? Because it is in the third slab. This was anyway 0. Okay? This is called as partial integration. They are coming and saying, boss, from your basic exemption limit, first give weightage to your agriculture income. Then bring your balance income. And tax those. How do you put it in a formula? Step number 1. Assuming agree income is not taxable. Your total income would have been 10 lakhs. So step 1, compute the tax on 10 lakhs. What is 10 lakhs? Your actual total income plus agree income. Correct or not? With this computing tax of 10 lakhs, you will find the tax for the full chart. In this, you don't want tax on what? You don't tax on agree. If you notice, agree is starting from where? From 2.5 till the balance. So what will you do? Step number 2, compute tax on basic exemption limit plus agree income. Yes or no? Technically, if you notice, basic exemption limit tax is going to be 0, which means the only tax you will be getting is agree income or a tax, which is nothing but this limit. Now you have the tax for the full chart. You're going to reduce the tax for the agree chart. You're going to receive what? The tax on the balance. So step number 3 is what? Step 1 minus step 2. Step 1 minus. This is called as partial integration. Did you understand what we did? Yes. Did you understand what we did? Steps okay. Any doubts? Let me know right away. I'm going to complicate it. No? Yes. Question number 1. Rahul, this provision is only applicable for people who follow slab rate income. Yes or no? Why? Yes. If you are a firm, will partial integration apply? Why? Because everything is going to be taxed at 30%. Yes or no? If you are in a firm, what is your basic exemption limit? What is your basic exemption limit? 0. If I bring in agree income also, agree will be taxable at 30%. PGBP will also be taxable at. Where is the difference? The intention why I am bringing the partial integration is because I wanted the PGBP income of 0.5 to be taxed at the highest slab. In this, there is no change happening. So will you apply partial integration? Rule number 1, partial integration does not apply when there is no slab rates happening. Rule number 2, income tax comes and says, boss, when I am doing partial integration, my intention is to earn big profits. They came and said, boss, if your agree income itself is 5,000 rupees, it doesn't make sense itself. Because the money which I'll get as an extra profit will be peanuts. So they came and said, boss, if the agri income for the full year itself is 5,000 rupees, ignore it off. Ignore the whole partial integration, directly exempt the agriculture income and tax the balance. And here, step number three. Rule number 3. They're saying, Rahul, partial integration only makes sense when your total income will go beyond 5 lakhs. I say total income, I mean including agriculture. Why? Look at it, no people. My 2.5 lakhs variko, I don't care. I don't care. If my agriculture income is 1 lakh, for example, agriculture income is 1 lakh. This would be taxable at what rate? 5%. Yes. If my balance income was, let's say, 0.5. Balance income was 0.5. Total income is how much? 4 lakhs. Total income is 4 lakhs. In this 0.5 is going to be taxed at what rate? If you put this 0.5 here itself directly, or you put the 0.5 here, number has not changed. Partial integration will give no answer. Yes or no? Do you want to change anything? Rule number 3 was partial integration only makes sense when after you include agriculture income, slab changes. After you include agriculture income, slab changes. It's correct or not? Okay, Purida. Rule number 4. Partial integration only makes sense when your other income is more than 2.5 lakhs. Partial integration only makes sense when your other income is more than 2.5 lakhs. Let's say your total income, excluding agriculture income, is 2.4 lakhs. 2.4 lakhs. What are you going to do? There is a gap here. There is a gap here of 0.1. Then you are going to bring in your agriculture income of, let's say, 3 lakhs. What was your intention? Your intention was to tax at 0.5 at the highest rate. If you follow the steps, step number 1 was what? Compute tax on actual total income plus agriculture income. My actual total income is 2.4 lakhs plus my agri income is 3 lakhs. Total will become 5.4 lakhs. So step number 1, compute tax on 5.4 lakhs. Step number 2, compute tax on agri income plus basic exemption limit. What is my basic exemption limit? 2.5. 2.5 plus 3 lakhs will become. Okay, step 2 will give you more tax than step 1, or step 1 will give you more tax? Step 2 will give you more tax. Step 3 was what? Step 1 minus step 2. Number will come negative, yes or no? Will department give you money back? Applicable. Provisions are coming in saying, boss, partial integration only makes sense when your other income is at least more than basic exemption limit. Appoda, what will happen? There will be some income which will go to the next slab. When your income itself is less than basic exemption limit, there is no point of you doing any kind of partial integration. Clear? Not clear? You understand all the 4 rules? Rule number 1 was what? You should have a slab rate concept. Rule number 2. Agri income should be more than 5,000. Rule number 3. After including your agri income, the income should change a slab. Rule number 4. Your normal income should be more than basic exemption. Clear? Yes, this is what the chapter end. This is what is your chapter end. Let's do one question. Question comes and says, your total income other than agriculture income is 5,30,000. You are required to compute the tax if the person is of the age 25 years and has earned a net agriculture income of 3,10,000. Your agri income is 3,10,000. Your other income is 5,30,000. Step number 1, compute tax on 8,40,000. Step number 2, compute tax on number 5,60,000. Step number 3. Step 1 minus. Find the answer, give me the number. Tell me what is the final tax liability. For step number 1, what will happen? 8,40,000. For the first 5 lakhs taxes, 12,500. Balance 3,40,000 at the rate of 20%. Correct? 3,40,000 into 20% will give you 64, 68. 68,000 plus 12,500 number is 85,000, 85, 8,500. 8,500. 80,500. On this, you will add cess number 83,720. Step number 1. Step number 2, you are required to compute tax on 5,60,000. Number is for the first 5 lakh, it is 12,500. 60,000 at the rate of 20% will give you 12,000. 12,000 plus 12,500 is given 24,500 plus 4% cess. 25. Step number 3. Step 1 minus step 2. Number is 8. Can we check in the chart? Can we check in the chart? Let's check in the chart. What will happen? What will happen? For the first 2.5 lakhs, this is pertaining to PGVP. It's pertaining to PGVP. Then I will include my agri income. I will include my agri income. How much is my agri income? 3,10,000. Meaning 2.5 plus 3.1 will be 5.6. 5.6 lakhs. Then what is my balance number left? What is my balance number left? 5,30,000 was my business income. 2,50,000 went into my slab. 2,50,000 went into my slab. How much is left? 2,80,000. How much is the number? End left. 5.6 plus 2.8 lakhs. 8.4 lakhs. Correct. Now tell me, 8.4 lakhs will be taxable in which slab? This 5.6 to 8.4 is in the third slab. Is in the third slab. Meaning this 2.8 lakhs will be taxable at the rate of number is add 4% cess. Is this the same number we got? Okay. More than the formulas, understand the logic, people. Steps now mug up under the derivation law. Anyone can mug up the steps. At the end of the day, practical world pogumbodhu logic na puriyum. Done? Done? Let's do some questions. Agri income should be the last. Shall we? Question number 1. You are required to determine whether the following income can be treated as agriculture income and be exempt from taxes. A rural society has as its principal business the selling on behalf of its member societies butter made from these societies from the cream sold to them by farmers. There is a person who is selling cream. That cream is made into butter. Butter is being sold by the society. The making of the butter was a factory process separated from the farm. Is it an agriculture income? Not an agriculture income. Agree. Don't agree. Okay, don't agree. Next. X was the managing partner of a company. He was entitled for a commission at the rate of 10% on the annual profits of the company. A part of the company's income was agricultural income. And Mr. X is claiming that since his remuneration was calculated basis this agriculture income, the commission should also be exempt from tax. Is he right or not? He's not right. The agri income is only for the business. The agri income is only for the business, not for the directors or the shareholders. Not for the directors or the shareholders. For them, it will become fully taxable. Mr. Y owned 100 acres of agricultural land, a part of which was used as pasture for cows. The land was purely maintained for manuring and other purposes connected with agriculture, and only the surplus milk after satisfying the assessee's needs were sold. Agree, not agree? Don't agree. Don't agree. Don't agree. Please understand, the land was used for pasture of cows, not for agriculture. not for agriculture. Adile kuda they're coming and saying this person is selling milk. Agriculture only happens from the land. It happens from the land. It does not happen from the milk. Okay. Income received from the sale of forest trees of spontaneous growth. That's one thing. Agree, not agree? Why? What do you mean by spontaneous growth? Huh? Agriculture is something where you need to put your own efforts. Spontaneous growth is something where the efforts are automatically happening. Therefore, this is not agree. Not agree. Next. Rent received for letting out of agriculture land for a movie shooting can be regarded as agriculture income. True or false? Mr. Rajpal took a land on rent from Mrs. Shilpa on a monthly rent of 10,000 rupees. He sublet this land to Mr. Manish for a monthly rent of 11,500 rupees. Manish is using the land for grazing of cattle required for agriculture activities. Rajpal wants to claim the 10,000 rupees from rental income received by it from Mr. Manish. All agree. All agree. Yes. Mr. Netharam grows paddy on a land. He then employs mechanical operations on the grains to make it fit for sale in the market, like removing hay and chaff from the grain, filtering the grain, and finally packing the rice in gunny bags. Agree, not agree? Any kind of process done for making the product fit for the market. Shall we go to the next one? Mr. B grows sugarcane and uses the same for the purpose of manufacturing sugar in his factory. 30% of the sugarcane is sold for the price of 10 lakh rupees, and the cost of cultivation for the sugar is given as 5 lakh rupees. The cost of the balance sugar is 14 lakh rupees, and the market value of the same is 22 lakh rupees. After incurring 1.5 lakh rupees in the manufacturing process of the balance sugar canes, the sugar was sold for 25 lakhs. Basically, what he did, he had sugar canes, 30% he directly sold, 70% he sent for further manufacturing. After further manufacturing, it was made into sugar and sold for 25 lakhs. You are required to compute Mr. B's agri income and business income. What will you do? I will prepare PGBP and agree. In this, I know in agree what is happening. Two items are there. One is 30% is directly sold, 70% is manufactured. 20% is manufactured. Let's complete the easy one, which is 30% actually sold. How much did he sell it for? 10 lakhs. He sold it directly for 10 lakh rupees. What is the cost of cultivation? 5 lakhs. Check. No, I don't know. 5 lakhs? 5 lakhs. Which means his direct agri income is 5 lakhs. Yes or no? Coming to the second part, 70% of it is given for further processing. I know the cost of this. What is my cost? 14 lakhs. I know my cost of cultivation as 14 lakhs. What I don't know, my sale value. I don't know what price I will sell it to my sugar factory. What price I will sell it to my sugar factory? I will sell it at a price of FMB. I will sell it at a price of FMB. Question comes and says FMB is. Therefore, my price profit from the sugar is 8 lakhs. Is this agree or PGVP? This is agree. Therefore, my total agree is 13 lakhs. Yes. Now coming to my business side. I know what is my sale value. I sold it directly for a price of 25 lakhs. My further manufacturing cost is given as 1.5 lakhs. What I don't know right now, I don't know the cost of the sugarcane. I don't know the cost of my sugarcane. If my sugarcane business is selling it to me for 22 lakhs, the cost for me will be 22 lakhs. Therefore, my PGBP is how much? Done. Understood. Yes. Compute the tax. Compute tax. Just waiting for some people to pick up calculators. Tax is 0. tax 0 because your normal income is less than basic exemption limit. Partial integration will not work, which means you will exempt the whole partial integration concept, and therefore the only income for you is 1.5 lakhs. Tax on that is clear. I'm going to flash over a second. Mr. C manufactures latex from rubber plants grown by him in India. What are the numbers? 3565. These are then sold in the market for 30 lakh rupees. Sale value is given as 30 lakhs. Cost of growing rubber is given as 10 lakhs. Manufacturing latex is given as total profit is. They're asking you for the total income, meaning split into PGBP and agree. PGBP will be 35%, agree will be 65%. PGBP is 4.2 lakhs. Agree is 7.2 tax. Compute tax. Or 34,000. Exam option kuttundikya. Anyone else? Same answer. Forty-three, 40. 40. Take an answer. What is step number 1? Compute tax on number. Number ma 12 lakhs. 12 lakhs. Number is like 1,79,000. தப்பு. சொன்னா புக்கு கீச்சிருவாங்க அப்படியே. சிங்கமா இருக்கும் சொல்லிட்டானு. தெரியலையா? கால்குலேட்டர் கரெக்டா வருதா? அதேதான் வருதா? $1,79,000. எப்படி வந்துச்சு? சொன்னா புக்கு கிச்சிருவீங்க. சொல்லட்டுமா? சொல்லட்டுமா? 115 BC ட்ரை பண்ணீங்களா? Day 1 mistake okay. Day 2 mistake okay. Day 3 சரி ஒரு காண்ட்ல இருக்கேன். இன்னைக்கு Day 4 என்ன பண்ணலாம் சொல்லுங்க. சும்மாவா குத்துருப்பேன், எனக்கு தெரியும் என்ன பிரச்சனை வரும். People. Nothing given in the question. Always check for. எவ்வளவு வாட்டி தான் சொன்னோம். First day சொன்னேன், mug up the golden rules and come. It will end up till your life. Mug up பண்ணிருந்தா steps follow பண்ணிருந்தா கரெக்டா வந்திருக்கும். நாமே போயிட்டு அதான் பிரச்சனை. You know, before you go for your exam hall, you have your book, no? Book ஓட first pageல பெருசா ரெட்டா எழுதிக்கும். Any question check for. These are very silly mistakes, people. Please understand and appreciate. These are not MCQ. These are not full-fledged questions. These are MCQ questions. These are MCQ questions, and I can bet to you this 5340 will be there in an MCQ option. You will come out all confidently saying, boss, I've got the right answer. I've got the right answer. And then you'll suddenly see single digits in your exam paper, and you'll come blaming, saying, I say is doing wrong. I say is doing wrong. There is something going wrong if something is going wrong. What is step number 1? What is number, ma? For the first 2.5 lakhs, it is 0. 2.5 lakhs to 5 lakhs, it is 12,500. 5 lakhs to 7.5 lakhs, it is 25,000. 7.5 lakhs to 10 lakhs, it is 37,500. Balance 2 lakhs will be taxable at the rate of 30%. 5, 10, 15, 20. 20%. Number is 40,000. Total it up. Imagine where 1,79,000 is, where this is. 1.5 yeah? 115 0. 1,15,000 add number. Step number 2, compute tax on basic exemption limit along with your agri income. So what is agri income? 7.8 lakhs. So 0 to 2.5 it will become 0. 2.5 to 5 lakhs will become 12,500. 5 lakhs to 7.5 lakhs will become 25,000. How much is the total income? 7,80,000 plus 2,50,000. Yeah. How much is the number? 10,30,000. Okay. 7.5 lakhs to 10 lakhs will give you 37,500. 10 lakh 30 soningla. Micha 30k at the rate of 20%. Number will give us 6,000. Total it up. 80. Access. 84 240. Step number 3 is 1,19,000 minus 84 240. Inge 53, Inge 35. They find the mistake varada. Vara. Andicha. Andichna enna pannalam? Andichna enna pannalam? Indha attempt skip pannalama. To get the mistake next time, will you skip this attempt? Yeah. Careful people. Silly mistakes. Let's not make that kind of mistakes. Okay. Let's be extra careful about those items. I'm again telling you, it's okay to take that extra 30 seconds. It's okay to take that extra 30 seconds. Please follow your golden rules. The moment you follow your golden rules, it will automatically hit your head whether you should check for 9 or 10. Check for 9 or 10. Please follow the golden rules. Don't hurry. Just because I ask you tax liability does not mean that I want the step number 11 directly. It's okay to take that time and do step number 9 and 10. You will automatically figure out whether you're making a mistake or not. Okay? Keep that golden rules in mind. There is a reason I'm giving it to you. Clear? Yes? Mrs. Vivita is a resident and an ordinary resident in India, deriving the following incomes. You are required to understand what is her business income and agriculture income. You are required to determine what is her business income and agri income. I'm going to put it on the right side. So, agri business. Okay. First one says sale of centrifuge latex processed from rubber plants grown in Darjeeling. 35, 65. 35, 65. 3 lakhs into 35 will give you lakh 5,000. Balance 1 lakh 95. Sale of coffee grown and cured. 2 words or 4 words? 2 words. 25, 75. 1 by 4th. So therefore 25. 1 lakh 25. Calculate the code. Sale of coffee grown, cured, roasted, grounded. 4 word வந்துச்சு. 100% is PGBP. Question படிங்க people. It says Colombo. Colombo is in Sri Lanka. Colombo is in Sri Lanka. 100% becomes taxable in India. 100% becomes taxable in India. Sale of tea grown and manufactured at Shimla. 60, 40. 2 lakh 40,000. 1 lakh 60,000. Saplings and seedlings grown in a nursery at Cochin. Basic operations not carried out on land. It is okay, fully exempt. It is fully agricultural income. There is an exception under agricultural income. They come and say any kind of income from nursery will be fully exempt from taxes. Fully will go under total. Five lakh 90,000. 5 lakh 40. 1 lakh 30,000 plus 1 lakh 80, 3 lakh 80, 4 lakh 40, 5 lakh 40 done. Done. You want to try computing taxes? You want to try computing taxes? But 15,320. Check if the answer is matching. Good guys, number 15,380. Yeah. Check and tell me if it's right or not. That's okay, quick. What is the reason? Two, 115 basic only. Money. Quick, அதுக்குள்ள 430 ஆச்சு நீ capital gains முடியாது அப்போ. Clean. 52. Fine. 52 is the answer, ma. Just verify it at home. Can we go to the next one? Let's look at question number 6. Mr. X has provided you the following incomes for the particular assessment year. Previous year 22-23. Income from salary is given as 2,80,000. Income from house property is given as 2,50,000. Agriculture income from land in Jaipur is given as 4,80,000. Expenses incurred for the agriculture land is given as 1,70,000. Technically, your agriculture income is how much? Yeah, the expense income illada. What are your slab rates income? 5,30,000. Yeah. Slab rate income is 5,30,000. Your other income is 3,10,000. You're required to compute the tax liability, assuming he does not offer 115 BSc and the age is 75 years. The same question is there in the study material, which we just discussed. 5,30,000 and 3,10,000 is what we discussed. We discussed it for 25 years. This is 75 years. The only change which will happen is basic exemption limit will change. The only change which will happen is basic exemption limit will change. Balance everything else is same. Balance everything else is same because you're not opting for 115. Yes. Do it at your home. Okay. Question number 5. Mr. Tenzing is engaged in the composite business of growing and curing coffee in Coorg, Karnataka. Abdina 2575. The whole of the coffee grown is in the plant is cured. Adina, curing, it's not the third word, same word only. Okay. Relevant information is given to you for the 31st March 2023. The WDV of the car which is having with the business is 3 lakh rupees. WDV of the machinery is given as 15%. Two different blocks now. Car over block, machinery over block. Expenses incurred for growing coffee is given as 3,10,000. Expenses for curing coffee is given as 3 lakhs. Sale value of the cured coffee is given as 22. 22 minus 3 minus 3 lakh 10. Number is 15,90,000 from the business. From the business as of now. Besides being used for agriculture operations, the car is also used for personal use. Disallowance for personal use can be taken as 20%. The expenses incurred for running the car and maintenance is given as 50,000 rupees. The machineries were used in coffee curing business operations. You are required to compute the income from the above transactions and also show the WDV of the assets. You know what is the income from the business, which is nothing but 15,90,000. What is pending in this? Car order depreciation and car order maintenance along with machinery order depreciation. Look at the question. It comes and says, what is my car maintenance? 50,000 rupees. How much should I allow as deduction? Number 40,000. Why? 50,000 is my car running and maintenance. Car is used 20% for your personal, which means only I can allow 40%, 80%. Therefore, 40,000 allowed as deduction. This is point number 1. Second, they're coming and saying there is an asset on which depreciation has to be claimed. No additions during there, only opening WDVs are given to you. So 3 lakhs into 15% will give you 45,000. 15 lakhs into 15% will give you 25,000. total is 2,70,000. This is your total depreciation for the year. Total depreciation for the year. But the problem is in this car is used for 20% personal, which means car cannot be 45,000. Car will be total now is 2 lakh. What is your total PGBP income? 12 lakh. This 12 lakh 89,000 is pertaining to only agriculture or agriculture and business. Agriculture and business, meaning you need to split into what's question number 1, asking the income from the above activities. Income is only 3,22,250. Next question, they're asking what is the WDV of the assets? What is the WDV of the assets? Please understand, your WDV opening block is given as 3 lakh rupees and 15 lakhs. In this, you have claimed depreciation of 36,000, 2 lakh, 25,000. These are your WDVs. Now, what was complicated in this? Why did they give a second question? Understand, there is 36,000 to reduce. There it is 36,000 to reduce, not 45. That is one. Second one, actually speaking, if you note this, you claimed a depreciation of 2 lakh 61. You claimed a depreciation of 2 lakh 61. But this 2 lakh 61 actually got split into 25/75, which technically means 75% of this 2 lakh 61 never came to you because it went into exemption. Because it went into basically what happened is people in the market came and said was 2 lakh 61 into 75% is actually lose for me because it is an exemption. So technically speaking, I should not reduce 2 lakh 25 and 36. I should reduce only 25% of that. That was what was the contention which was made by the assessees. Changing the thought, income tax amended the provision. They came and clarified, no boss, it doesn't work like that. It doesn't work like that. For the purpose of WDV, I will consider the full amount. For the purpose of WDV, I will consider the full amount. I will not change it into 25/75. In simple terms, exam பொறுத்த வரைக்கும், what depreciation you reduce it from the WDV. முடிஞ்சு போச்சு கதை. Don't think too much. Don't think too much. In the 25/75 varoma, and the 40/60 varoma. Don't think. What depreciation you allow, take it to the blocks. That's all. Clear? This marks the end of your agriculture income. Any doubts? Great. We're going to start with the topic called as capital gains. We have 3 chapters in my book. One is called as capital gains. The other is called as business reorganization, and the last is called as distribution to owners. Okay. The last 2 chapters are two sides each. I just split it for my convenience. That's all. Capital gains is the biggest chapter. We're going to discuss all these chapters. We have class till 7. No? Great. We are right now at 4:40. We are at 4:40. Let's come back at 5. You can take a 20 minutes break. Let's come back at 5. Next 2 hours, we'll do capital gains and then we'll complete the chapter. Okay? So, take a break. Right. Sorry for the delay. I don't know why the route is blocked. What shit is happening in the bottom? Anyway, for you or for others? For you or for others? In Mylapore, the only weekend happens is you go to temples. That's all. No other things happen here. No fun in Mylapore at all. The only thing you do in Mylapore is go to and pray before some stone pages. Anyway, there is a chapter called as capital gains right now. Okay, let's quickly understand the chapter. Technically speaking, if you understand the logic of the chapter, it's a very easy chapter. Okay, you don't have anything complicated about this chapter if you understand the logic behind it. Right? So let's work on the logics and let's understand this chapter in the most simplest of those terms. Because from an exam perspective, the only thing which is most important is immovable property. I'll cover everything else is just a walkthrough. You just have to go and brush it off. Okay. So we're going into the chapter called as capital gains. Provisions are very simple. I told you every chapter starts with something called as starting section. The section here comes and says that any kind of transfer which you do of a capital asset will be taxable under the head. That's all. Okay. Any kind of transfer which you do under the head capital for a capital asset will be taxable under the head capital gains in the year in which the transfer takes place. In the year in which the transfer takes place. When you register the transfer, that is the year in which the capital gains is taxable, but there are certain exceptions to this. Understanding what is a capital asset, they basically said, boss, any kind of asset which you own is called as capital asset. Any kind of asset which you own is called as capital asset. But then they put some exclusions. One exclusion they came and said stock in trade. Why? Because it is taxable under PGBT. Taxable under PGBT. Second, they came and said, boss, any kind of personal movable assets are not taxable. Any kind of personal movable assets are not taxable. What do you mean by personal movable assets? Your mobile, your iPhone, your car, all those items. Yes, these items are not taxable. But what is taxable is your BA pass DJ. What is taxable is your BA pass DJ. Bullions, archaeological collections, paintings, any work of art, shapes, sculptures, drawing solid drawings, jewelry. Yeah. These are the items which are taxable even if it is a personal asset. Even if it is a personal asset. So when it comes to immovable property, everything is taxable, whether it is personal or business. But when it comes to movable property, if it is personal, then only BA pass DJ is taxable. Balance, everything becomes not taxable. If it is business, everything else is taxable. If it is business, everything is taxable. That is why if you notice this is linked to your IFOs. In your IFOs also only BA pass DJ is taxable. Here also only BA pass DJ is taxable. What is not taxable here is what is not taxable there also. Clear? Yes. Yes. So if someone is selling a mobile phone, the transferor also will not get a tax. The transferee also will not get a. That is what the provision. Clear till now? Yes. Apart from this, if you notice the charging section, you'll notice something called ULIPs. You'll notice something called FIIs and all those things. You can ignore all those. You can ignore all those. All those have been moved to finals. Okay. Definition la mattum vechirukanga. Adu thavara everything they have moved to final level, so you don't have to worry about it. Okay. So this is what is the definition of a capital asset. I told you somewhere in the capital asset only that what is excluded from a immovable property is your rural agriculture land. Now, what is a rural agriculture land? We discussed in agriculture income, but just for the sake of convenience, I am showing it here. Okay. Any kind of municipal properties where the population is more than 10,000 will become urban. If it is within 2 kilometers, also it is 10,000. If it is after 2 kilometers up to 6 kilometers, it is 1 lakh. If it is after 6 kilometers up to 8 kilometers, it is 10 lakhs. After 8 kilometers, everything becomes. That is what the provisions are. For the sake of summary, I have also put it here. How does a property work? If it is movable, then what happens? Immobile, then what? Yes. Now that we've understood what our capital assets are, we need to classify those capital assets because capital gains has a concept of short term and long term. So we need to classify all our capital assets. We have classified into 3 buckets. 12 months, 24 months, 36 months. 12 months, 24 months, and 36 months. If something goes in the 12 months bucket and you are holding it for more than 12 months, it becomes long term or else it becomes short term. That's how the provisions are. Okay. What happens in your 12 months bucket? We are basically telling that boss, any kind of listed securities which you have. Listed securities which you have will be classified under long term if it is going more than 12. If it is going more than 12 months. Then the next item is called as equity oriented mutual funds. What? Equity oriented mutual funds. Your ULIPs, which is an amendment, comes into this. ULIPs is not an amendment. I don't know if it's an amendment for your item. It's not an amendment for your item. Anyway, ignoring, not relevant for exam purposes. Equity oriented mutual funds also come within 12 months. And the last item is zero coupon bonds. Last item is zero coupon bonds. UTI is what? Union Trust of India, same mutual funds only. Same mutual funds only. So what are the 4 items? One is your listed securities, equity oriented mutual funds, units of Union Trust of India, and zero. இது தவிர they are coming and saying, boss, if it is not listed security, it will be unlisted security. That will become 24 months. That will become 24 months. 2 items which are covered in 24 months is your unlisted securities and your immovable property. Immovable property. Anything apart from these two will come under the bucket of 36. Anything apart from these two will come under the bucket of 36. If you do a slump sale, it will go under slump sale. Know what is slump sale? Sale of your business plan, sale of a business unit comes under 36 months. Debt oriented funds. That is how the answer is. Jewelry. All these will come under 36 months. Okay. So all these are your buckets. All these are your buckets. If it does not fall in 12, 24, and then it will fall under 36 months. Clear? Yes. With this is what you will classify whether it is an asset of long term or short term. In long term, we have 2 kinds of long terms called as 112A and 112. Short term, we have 2 kinds of assets called as 11 money and 11 money and others. Yes, there is no 111 and all. It is all others. Goes under Finance Act. Goes under Finance Act. 112A, we told the tax rate is 10% in excess of 1 lakh rupees. 112, we told the tax rate is 20%. 111A, we told the tax rate is 15%. Finance Act tax rates are slabs. Finance Act tax rates are slabs. Surcharges will be as follows. All the capital gains except for Finance Act will be taxable at a maximum surcharge of 15%. And then if you have a basic exemption limit which is not exhausted, capital gains can be utilized for the purpose of basic exemption limit provided you are a resident. Provided you are a resident. What falls under 112 and all we'll discuss as we go forward. We'll discuss as we. Yep. This is what the process is. This is what the process. Coming to the first exception, I told you that was anything which is taxable will be taxable in the year in which the transfer takes place. But then there are certain exceptions. Exception number 1 calls as insurance compensation. What does it call as? Provisions are basically coming and saying that, boss, if you have any kind of assets which are lost in a fire, any kind of assets which are lost in a fire, and the insurance company is giving you the compensation for it, technically the asset is taxable in the year in which the asset is destroyed. Technically, the asset is taxable in the year in which the asset is destroyed. But please to understand, insurance does not happen in a matter of day. It takes couple of months, sometimes it takes year also, correct? So they came and said, boss, it will only be taxable in the year in which the compensation is received. So which means I will try to compute my tax on the date on which the asset is lost, but I will pay the tax only on the date on which the asset is. What am I trying to mean is, let's say for example, the asset was destroyed in 2017. Asset is destroyed in 2017. Compensation came to me in 2022. Compensation came in 2022. My tax will be collected in the year of 22. But indexation will be up to the year of 2017. Indexation will be only up to the year of 2017. What I am deferring is the payment of taxes, not the computation. Not the computation. Just because it is taxed in 2022, you cannot come and say indexation will be granted till 22. Indexation will be granted till 2017. Clear? So the first item we're discussing is insurance compensation. Comes and says that the tax will be collected in the year in which the money is received, but the tax will be computed in the year in which the asset is. This is the exception number 1. Exception number 2. Conversion of capital asset into stock in trade. Capital asset into stock in trade. Provisions are basically coming and saying that if you have a capital asset which you convert into stock in trade, 2 transactions are happening. One is the capital asset being sold. Capital asset is being sold. Second, you have a stock in trade which you will sell as a PGBP. Correct or not? So they came and said, boss, when you're transferring from capital asset to stock in trade, that time there is a problem. I'm deeming it as a transfer. What is the value at which I should transfer? Fair market value. Same logic as sugarcane. What is happening? Your capital asset is reclassified into stock in trade. Assume that you have sold your capital asset and bought back a stock. You will sell it at what value? Fair market value. You will buy it at what value? Fair market value. So what is the sale value for the capital asset? It is fair market value of the capital asset. What is the cost of acquisition for the stock in trade? Fair market value of the capital asset. Same logic. Okay. So what are you going to transfer it at? You're going to transfer it at the fair market value. Clear? Here is where income tax comes and says that, boss, if you are going to convert your capital asset into stock in trade, you will tax the capital asset on the date on which the stock in trade is sold. You will tax it on the date on which the stock in trade is sold. If you have a capital asset, I have a jewelry, my own jewelry, treated as a capital asset. I converted into my business jewelry in 2017. In 2022, I sold this business jewelry as a stock in trade. PGBP income will come in the year 2022. Capital asset income will be deferred to 2022, but capital gains will be computed on the date on which the asset is converted, which is 2000. Clear? Yes, conversion of capital asset into stock in trade. Capital asset will be taxable in the year of conversion, but the tax will be collected in the year in which the stock in trade is sold. Clear? Check the provision. This is the one. When it comes to capital gains, you have full value of consideration less the cost of acquisition less the cost of improvement. You will arrive at short-term capital gains or long-term capital gains. When it comes to PGBP, you have the sale price of the stock in trade less FMV of the capital asset. FMV of the capital asset, that will become your PGBP. Both together will be taxable in the year of sale of stock in trade. Clear? Yes. Coming to the alternate, you are going to convert your stock in trade into capital asset. First transaction is PGBP. After that, the next transaction is capital gains. We are in which chapter? In PGBP and capital gains, we can only defer capital gains. We cannot defer PGBP. First transaction here is going to happen as PGBP. Tax will be collected in the year or no? Year of conversion. For stock in trade to capital asset, first transaction is PGBP. Collect the tax in the year of conversion itself. When the capital asset is being sold, it is anyway being sold. You will collect the tax in the year of sale. Please understand, what we can defer is only capital gains. What we cannot defer is PGBP. So PGBP will be taxable as and when it happens. But capital gains alone can be deferred to a later date. Okay. So the second transaction is a stock in trade to capital asset. In this, the first transaction is a PGBP transaction. Therefore, that cannot be deferred. PGB capital gains is anyway going to be taxed on the date on which the transfer happens. But look at the first scenario. What is happening? First transaction is capital asset into stock in trade. The conversion is happening of a capital asset, which means gains is going to be first capital gain, then only it is going to be. In that scenario, you can come and defer the capital gains and move it to. You can move it to PGBP. Clear? Yes. The alternate is here. The sale value of the stock in trade will be considered less the cost of stock. You will get the PGBP. Right side is what? Your sale value of the actual capital asset less cost of acquisition, which is nothing but the fair market value of the stock in trade. Nothing but the fair market value. In this case, both the taxability will happen individually. Conversion will happen on a conversion date and transfer will happen on the transfer date. Clear? Second exception. Exception number 3 talks about compulsory acquisition. What? Meaning. When the government forcefully takes your property. Is called as compulsory acquisition. Same logic as insurance compensation. Meaning, your asset will be taxable in the year in which the transfer is made, but the tax will be collected in the year in which the compensation is. Here is where a small change happens. They come and say it is not taxable in the year in which the compensation is received. It is taxable in the year in which the first installment is received. What? For example, if the government acquires your property for 5 crore rupees and next year they give you 1 rupee as token money. 1 rupee as token money. On the date on which they give you the 1 rupee, the full 5 crores is taxable. The date on which the first installment is received, everything becomes here. Yes. When is the tax going to be computed? Date of acquisition. When is the tax going to be collected? Clear? Yes. I went and I filed a case. Said, sir, my property is actually worth 10 crores. Government is only giving me 5 crores. Government is only giving me 5 crores. Case decision happens, government comes, court comes and says, boss, you are eligible for 8 crores. Eligible for 8 crores. How much extra did you get? 3 crores. When is this 3 crores taxable? When we receive. Same logic, when the government pays that money. The government pays the money. Question to you on this, what is my cost? Only the legal charges. There is no cost of acquisition, right? The only cost which you have is legal charges. Third question. What is the nature of that compensation? Long term or short term? How do you decide? Will you check how many years the court decision was going on? What will you check? You'll check the original asset. You'll check the original asset. Please do understand, your technically court has now decided total compensation should be 7 crores. 8 crores. Total compensation should be 8 crores. This 8 crores pertains to the main asset, yes or no? Which means, had you received the 8 crores in the first limb itself, you would have taxed everything as long term or short term. Yes or no? You cannot change the decision now. You cannot change the decision now. So the enhanced compensation will also be taxable in the same nature as what is the original compensation. Here. Look at the compensation. You have two kinds of compensation. One is called as initial, one is called as enhanced. When it comes to initial compensation, it is taxable in the year in which you receive the first installment, where you'll take the actual consideration minus the cost of acquisitions. You will arrive at a capital gains. Come to the right side, you have something called as enhanced compensation. It will be taxable in the year in which you receive it. Taxable in the year in which you receive it. Nature of it will be the same as others. Look at the bottom. LTCG, STCG, same as initial compensation. As initial compensation. Clear? Yes. But there is one problem. There is one problem. What happened is, I went to the court and I came and said, I got a compensation of 5 crores. I am expecting 10 crores. Expecting 10 crores. In this, government gave me 8 crores. Correct? But what happened is, this 8 crores was not given to me last. What happened is, I went to the court and I came and said, sir, I actually want to buy a new property. To buy a new property. The cost of the new property is 6 crores. In this, government gave me 5 crores. 1 crore is what I'm missing. 1 crore is what I'm missing. At least if you're going to pass a judgment for me in my favor, today itself you tell the court that you give me 1 extra crore. Give me 1 extra crore. In this case, court can pass something called as an interim order. They can pass an interim order and come and say, boss, Rahul is right now begging for 1 extra crore. Interim order passed saying, give Rahul 1 extra crore. Give Rahul 1 extra crore. Future, once the decision is made, we will decide how much extra to be given. Yes. So what happened is, 5 crores government decided. 1 crore government gave me in the form of interim order. Balance 2 crores they decided in the form of final order. That is why it became 8 crores. That is why it became 8 crores. Question to you. This interim order, I received the 1 crore on the date on which the interim order was passed. Should I tax it that time itself? No. Here is where government comes in. Income tax comes and says, boss, hold. Please understand, this 1 crore is given as a part decision. Given as a party decision. Now, government can come and decide, court can come and decide your compensation only 5 crores. What will you do? 1 crore tirpi kurti agno. Is it final? Is it final? No, it's not final. Therefore, the court came and said, boss, in cases where the number itself is not final, I cannot expect you to pay tax today itself. I cannot expect you to pay tax today itself. So they came and said, boss, the balance 1 crore, the 1 crore which is given by the way of interim order, will be taxable on the date on which the final order is passed. Final order is passed. On the final order date, they decided it is 8 crores. In which case, what they'll do, boss, 1 crore they will tax today itself because I already got it by way of interim order. Balance 2 crores will be taxable on the date on which the government gives it to me. Yes. So 5 crores I will tax on the date on which the government gives me the first installment. 1 crore pertaining to the interim order I will tax on the date of final order. And the balance 2 crores I will tax when the government gives me after the enhanced compensation. Clear? In this, if the government is liable to give me compensation, if they forgot to give me the compensation or it is delayed, they will have to give me something called as interest on enhanced compensation, will be taxable under the head IFOS, will be taxable in the year when it is received, and the deduction which will be eligible is 50%. Deduction will be eligible is 50%. Clear, not clear? We discussed it in IFOS. This is what the third exception. This is what the third exception is. Fourth exception in your books is called as JDA. What? JDA. Bad word. Exam ignore it. Not coming from exam perspective. Not coming from exam perspective. பார்க்கிறதுக்கே ஒரு மாதிரியா இருக்கு. Okay, ignoring from exam perspective, not coming in exam. With this, your exceptions are done. With this, your exceptions are. Okay, so 3 exceptions from exam perspective. First item is called as your insurance compensation. Second item is called as your conversion of capital asset into stock and trade. Third exception is called as your compulsory. 3 exceptions coming for your clear. Clear with the exceptions? Yes. Now coming into the format. Every chapter has its own format. Format looks like this. We start from full value of consideration, reduce cost of transfer, arrive at something called as net consideration, reduce something called as cost of acquisition, cost of improvement, capital gains. Capital gains. If you have an exemption, you will give an exemption and you will arrive at the net capital gains. The only difference between a short term and a long term is cost of acquisition will become index cost, cost of improvement will become index cost. Clear? We'll work on this format, but before we get into the format, there are some exceptions to the transferability itself. Exceptions to transferability itself. Section 47 comes and says some items could be taxable. Items could be taxable. I want to give no tax on it. First and the most predominant from exam perspective, gift. Meaning, if you give a gift to someone, that will not be taxable under the head capital gains. Will not be taxable under the head capital gains. Why? The receiver will pay tax under IFRS. Transferor will not have any tax. Clear? First and the most predominant one. Second items are there in the subsequent chapter, so we'll discuss. Second items are there in the subsequent chapter about amalgamation, demerger, and all. We'll discuss in the subsequent chapter. Right now, not relevant. Only one thing relevant from exam perspective. Yes. Other than that, there are multiple items. If you notice my book also, you will find multiple items inside it. None of them are relevant from exam. None of them. Exam. Only one thing which is relevant from exam is called as reverse mortgage. What is it called as? What is reverse mortgage? Very good. Died na tevil. You don't have to die for it. You will give it normally also. Okay. The point what is happening is, in a case of a mortgage, what will happen is, initially bank will give you lump sum money and then you will repay in EMIs. But in the case of a reverse mortgage, bank will initially give you EMIs and then collect lump sum money. Some money, that is called as a reverse mortgage. Provisions are basically coming and saying, boss, if there is any kind of reverse mortgage happening from the senior citizen to your bank, the money is not taxable as capital. Gains. Whatever money the bank gives to the senior citizen is also exempt from tax under section 10. Okay, so bank kudukar the EMI exempt. Bank vangar the property is also not treated as a transfer. Appo what is taxable, Rahul? Tomorrow, if I don't pay the money back, who does not pay? Senior citizen. Tomorrow, if the senior citizen does not pay the money back, what will the bank do? They will sell the property. If they sell the property, will the bank keep all the money from the property, or will the bank keep only to the extent of the loan which they have? To the extent of loan which they have. Balance money, what will happen? They'll give it back to the senior citizen. So tomorrow, if the bank is going to sell the property of the senior citizen, this is a capital gains for the bank or for the senior citizen. So in this whole transaction, there is only one leg which is taxable, which is your sale of the asset by the bank on behalf of the senior citizen. In which case, the capital gains will be taxable in the hands of. These are the only two things which you need to remember. Apart from that, you can ignore everything else. The first item is gift. Which is here 47.3. After that, everything else you can ignore, and somewhere in the bottom here it is 47.16. Transfer of asset in a reverse mortgage is exempt. Any amount received by the senior citizen as loan is also exempt. However, the subsequent sale of the capital asset on behalf of the senior citizen will become taxable as capital. It's clear? Yeah. One rule when it comes to capital gains: if something is not taxable, the cost of acquisition for the new owner will be the cost to the previous owner. The cost of acquisition for the new owner will be the cost to the previous owner. The period of holding of the new owner will start from the period of holding of the old owner. But indexation will only continue from today. Indexation will not start from the previous owner. Indexation will start from the current owner. You have an option to choose indexation from the previous owner also. provided in the exam you clarify to them that you are following Manjulasha. Provided you are following in the exam, if you clarify to them that you're following Manjulasha, you can start from the period of indexation from the previous owner. But if you're not following Manjulasha, always opt for indexation from the here. Yes, what is this indexation? We will discuss. Coming back to the format, the format has the full value of consideration, less cost of transfer, less cost of acquisition, cost of improvement, arriving at the capital. Gains. Starting from the first item called as full value of consideration. Full value of consideration. Income tax basically comes and says, boss, full value of consideration meaning the actual consideration. Full value of consideration means. But yes, if you are not able to determine the full value of consideration, it will become the fair market value of the asset. Here is where I'll take a pause and I'll go to the very last of this chapter called as section 50C. Section 50C. This section basically comes and says when you transfer your capital asset being an immobile property. What? Immobile property. If you are going to transfer your immobile property, please ensure that you transfer the asset at stamp duty value. Stamp duty value. If you do not transfer the asset at stamp duty value, it will be assumed that the stamp duty value is the full value of consideration. Assume that the stamp duty value is the full value of consideration. Exception is only one. They're coming and saying if the full value of consideration is 110% of stamp duty value, then you don't have a problem. Meaning, if your full value of consideration is 100 rupees, your stamp duty value should fall within 110. Your stamp duty value should fall within 110. If it falls within 110, you will take the consideration as 100. You will take the consideration as 100. No, my stamp duty value is 120. You will take the full value of consideration as 100. Where did you learn this provision? You learned the same provision in IFOS where you basically came and said that boss consideration will be treated as stamp duty value. The gift element will become the stamp duty value provided it is less than 110% of same provisions. Meaning the next provision is also the same. If you have a stamp duty value, if you have two stamp duties, one on the date of agreement, one on the date of registration, you will normally take registration. You can take agreement provided you receive two conditions. Condition number one, receive advance money. Condition number two, it should be received by permissible. Satisfy both the conditions, you will get the stamp duty value on the date of. Here, let's see some examples. See. Scenario number one. Your actual consideration is given as 100 rupees. Stamp duty value is given as 120. You will take the full value of consideration as because stamp duty value is more than 110%. Therefore, it becomes 120. Scenario number two. Your actual consideration is 100. Your stamp duty value is 109. Did you satisfy the conditions? No. Because it is within 110% of consideration. Therefore, your actual consideration, full value of consideration will become 100. In this scenario, what is your gift? What is a gift, ma? IFOS income. What is your IFOS income? 0. If it goes beyond 110% only, your gift element will come into picture. It did not go beyond 110%. Two conditions to satisfy. Condition number one should go beyond 110%. Condition number two should go beyond 50,000 rupees. 110% is Mylapore. Therefore, this becomes 0. Applicable. Scenario number one. What is your IFOS income? What is your IFOS income? 20. What is the gift element, people? Stamp duty value minus actual consideration is your gift. Correct? Yes. Scenario number 3. Your actual consideration is 100. Your stamp duty value is 95. You will take actual of 100. Why? You are only applying this provision when the stamp duty value is more. Here the actual itself is more. Therefore, consideration full value will become 100 directly. What is your IFOS income? 0. There is a gift element in this. Not there. Clear? Yes. Then the next part I told you, when the stamp duty value on the date of agreement can be considered, provided you do token money and you get it in permissible modes. Next they came and said, boss, if you're not happy with the stamp duty value, you can refer to someone called as valuation officer. You can refer to someone called as valuation officer. If the valuation officer is benefit of the assessee, you can take the new value. Suppose if the stamp duty value is 100, stamp duty values, valuation officer comes and says you can take it as 80. You will take 80. You will take 80. Valuation officer is not happy with you. He comes and says value to be taken as 120. What will you do? Keep quiet. You will keep quiet. You will not go and tell the assessing officer that he has a grudge on me. You will say, sir, I'm okay with 100. Let's work with 100. I'm okay with 100. Let's work with 100. 120 ki idve parvala. Correct? நீங்களே போயிட்டு காலை கொடுக்காதீங்க. What is a joke in Hindi? We say खुद के पैर पर कुल्हाड़ी मारना. बिना you itself go and correct. Yes. So if you are going to a valuation officer and the valuation officer is doing something for your benefit, consider the new value. If the valuation officer is not going to be in your benefit, meaning he's going to be more than stamp duty value, you will consider the stamp duty value itself. Basically, you're saying valuation officer is only for the assessee, so you should take whichever is beneficial to the. Yeah, this is what the provisions are. 50C. This is what is the provisions for. 50C comes 50CA. CA same provisions as 50C. Discusses about unquoted shares. Discusses about unquoted shares. Provisions are basically coming and saying if you're selling any kind of unquoted shares, please ensure you sell it at FMB. If you're not selling it at FMB, I will assume that the full value of consideration is FMB. To stop, no 110%, no stamp duty value, no date agreement, no nothing. FMB ku vitte agano, FMB ku vittlana enna agum? FMB edutrum. FMB edutrum. Yeah. This is your first full value of consideration. Next, you reduce something called as cost of transfer. What do you mean by cost of transfer? Any kind of brokerage charges, commission charges, whatever is necessary for you to complete the transaction will be called as cost of. You reduce that, you will arrive at something called as net consideration. In the net consideration, you will reduce something called as cost of acquisition. Stopping here. What do you mean by cost of acquisition? The actual price which you pay. Actual price which you pay. But yes, if the asset was taken before 2001, they are giving you an option. They are coming and saying, boss, if the asset was purchased before 1st April 2001, you can consider the actual cost of the asset or the asset value on 1st April 2001, whichever is beneficial to the asset. See, meaning technically higher. Technically higher. Here is where for immovable properties there is a small change. In immovable properties, they are coming and saying it is actual cost or lower of the stamp duty value and FMB on 1/4/2001, whichever is high. Appadina enna pannu? First SDV and FMB, whichever is lower. SDV and FMB, whichever is lower, will be compared with the actual cost, whichever is higher. Look at the example. Your actual cost in scenario 1 is given as 100. FMB is given as 110. Stamp duty value is given as 90. You will do what? FMB and stamp duty value, whichever is lower. Number is compared with the actual cost, whichever is. Therefore, 100. Scenario number 2. 100, 110, 120. 110 versus 120, whichever is lower. Therefore, 110. Compare with 100, whichever is higher. Therefore, 100, 130, 120. 120 versus 100, whichever is lower, therefore, whichever is higher. Therefore, here, yes. So the provisions are coming and saying if you acquire the asset before 1st April 2001, please consider the actual cost of the asset or FMB, whichever is higher. But if it is an immovable property, FMB or SDV, whichever is lower, will be compared with the actual cost, whichever is. Yes. Everything else is ignored. Everything else is ignored. You don't have to read anything else. Basically, other items are intangible assets and all. They said was intangible assets, you take it as 0. Unless and until you are purchasing it. Unless and until you are purchasing it. Not relevant from exam perspective. One item which you need to know after this is something called as advance forfeiture. What? Advance forfeiture. They're coming and saying, boss, if you have forfeited any kind of advance money, advance money, please check whether the advance forfeiture is happening before 2014 or after 2014. If it is happening after 2014, check IFOS. But if it is happening before 2014, please reduce it from the cost of the asset. Please reduce it from the cost of the asset. Meaning cost of acquisition. Cost of the acquisition after doing indexation, before doing indexation. Before doing indexation, cost of acquisition minus advance forfeiture, that will be indexed. That will be indexed. Clear, not clear? Yeah, this is what is advance forfeiture. With this, what you're done with is something called as cost of acquisition. Indexed cost of acquisition means what? You are now having a long-term asset. Having a long-term asset. You're eligible for doing something called as indexation on that. Indexation is actual cost of acquisition into CII. Cost inflation index, CII, of the year of transfer divided by the CII of the year of acquisition. CII of the year of acquisition. For your exams, the CII for the year of transfer is 331. What? 331. CII for the year 2001 is 100. CII for the year of 2001 is 100. CII for the year of your transfer is 331. Rahul, do I have to remember the balance numbers? Exam will give it to you. Exam will give it to you. Balance numbers are not to be remembered. Two numbers to be remembered, 331 and clear. Yes. Here is where you need to check for the Manjulasha case. Basically, what is happening? Numerator is CII in the year of transfer. Denominator is CII in the year of acquisition. Here is where you need to take a choice. If you are opting for Manjulasha case, acquisition will start from the previous owner. If you are not opting for Manjulasha case, CII, it will start from the year of current owner. It will start from the year of current owner. What you want to do, your choice. What you want to do, your choice. My preference, do not opt for Manjulasha. Do not opt for Manjulasha. For whatever exam questions, at least I have seen, answer keys, what they'll do is they will say non-Manjulasha in the answer. They will say non-Manjulasha in the answer and put Manjulasha in alternative. They'll put Manjulasha in alternative. Because of which, what happens if some examiner is not in the right mood, what he will do? He will ignore the alternative note and he'll just take the balance upper item, upper number match agle cut panittu poiduvar. Possible. People have that much hatred also. You don't know. You don't know. So let's not take that chance. Let's not take that chance. Let's not opt for Manjulasha case because that will never be tested on the main answer. It will only be given as an note. So you have a choice. Again, it's a choice. I'm not telling that it's a wrong answer, but don't take a chance. Don't take a chance. Attempt to mukyam. Okay, clear? Yes. So this is your cost of acquisition. Your cost of acquisition. Next is your cost of improvement. Cost of improvement. Provisions are coming and saying if you have done any kind of capital expenditure, that will be considered as a cost of improvement. That can also be indexed. What is the provision? Cost of improvement into CII in the year of transfer divided by the CII in the year of improvement. CII in the year of improvement. Here is where they give a change. They come and say, boss, if you have done the improvement before 2001, you cannot fair market value the improvement. So they said put it as 0. Put it as 0. CII of the year of improvement, if it is before 2001, will be fully ignored. You will not consider it itself. No allowed. Will not be allowed. Clear? Yes, this is what the provisions are when it comes to cost of improvement. If you have arrived at your cost of improvement also, the answer now which you will get is called as long term or short term. In this, you will reduce something called as exemptions. Before we go into exemptions itself, we have certain special cases. First, the special case would be something about bonus shares. About provisions are coming and saying, boss, if you have given someone bonus shares, cost of acquisition for that bonus shares is 0. Period of holding will start from year in which you give the bonus. But Rahul, I gave the bonus before 2001. My cost is, what is the cost? It is cost or FMB, whichever is higher. Cost is 0. FMB will be higher. Therefore, you will take FMB. Simple logic, no? What did I say? It is, if it is asset is before 2001, take the actual cost or FMB, whichever is higher. Inge cost is 0. FMB will be what? Higher only. So therefore, you will take the FMB. This is come to bonus shares. This is for bonus shares. Second is your right shares. What shares? In right shares, they're coming and saying, boss, if you have received any kind of right shares, you have two options. Either you will itself exercise the right or you will renounce the right. I exercise the right. My cost of acquisition will be the amount I receive, amount I paid, that's all. My cost of acquisition will be the amount I paid. Hey, எனக்கு share வாங்குறதுக்கு என்ன காசு கொடுத்தேன் அதுதானே என்னோட cost. When is my period of holding starting from? The date when the shares are allotted. முடிஞ்சு போச்சு. Simple logic. The date on which the shares were allotted. I have not exercised the right. I renounced the right. I renounced the right. Two people are involved now. I giving the renunciation of right. The other person taking the right. The other person taking the right. When I renounce the right, did I earn a profit? Yes. What is my sale value? The price at which I renounced. What is my cost? What cost did you have? Nothing you had. Nothing costs were given to you. Therefore, it will be directly the renunciation price. Directly be the renunciation price. Period of holding is from the date on which you got the right till the date on which you sold the right. Suppose you are the person who has bought the shares after renunciation. You would have paid two people. One is the person from whom you took the renunciation right. Second is the price of the share which you paid to the company. So two costs for you. Cost number one is renunciation price. Cost number two is purchase price of the share. Period of holding will start from the date on which the share were allotted. The date on which the share was allotted. Clear? Last item is depreciation. Last item is depreciation. They are coming and saying if you are holding any kind of depreciable assets, holding any kind of the capital gains on a depreciable asset will always be short term. Will always be short term. I don't care whether you hold it for 12 months, 24 months, 36 months infinitely. I will always treat it as a short term capital gains. I will always treat it as a short term capital gains. But yes, for you to become taxable under capital gains, the conditions are to be satisfied, which we discussed in PGBP. What did we discuss? Your block should cease to exist. Your block should cease to exist. It can cease to exist in three scenarios. Scenario number one, my block is fully gone. My block is fully gone. All the assets in the block I have sold off for either a profit or a loss. That is two scenarios. Third scenario, my block is still alive, but the sale value is more than my cost. Sale value is more than my cost. In that case also, you'll go to capital gains. The only case where you'll have depreciation is block should not cease to exist. My sale value should not be more than my block. It should not be more than my block. In that case, you will continue your depreciation. You will not come to clear, not clear. This completes your special scenarios also. Check your book. Tell me if there's anything pending. Next chapter. All done? Have I covered everything? Whatever we discussed till now, understood? Logic purinjada. Yes, I have not tried to mug up the provisions. I have made you explain the logic so that when you do the sum, you'll automatically get the logic here. Yes. Coming back to the provisions, we have now completed the format to the extent of gross capital gains. We have completed to the extent of gross capital gains. Now we are entering something called as exemptions. Entering something called as, I think for your inter, you have 5 exemptions. 1, 2, 3, 4, 5. You have 5 exemptions. I am going to discuss 3. I'm going to discuss 3. Rahul, what to do with the balance 2 also I will tell you. I will tell you what to do with the balance 2 also. I'm going to discuss 3. What am I going to discuss is I'm going to discuss 54, 54 EC, 54 F. 54, 54 EC and 54 F. Coming to 54. Provisions are basically coming and saying, boss, if you have sold any kind of house property, if you have sold any kind of house property and you have bought another house property, this will be exempted under 54. 54F comes and says you have sold anything else but bought a house property. 54 says house to house. 54F says anything other than house to house. Anything other than house to house. EC will discuss later. EC will discuss later. Coming 54 and 54F, house to house. Anything other than house to. In both the scenarios, what is the asset to be transferred? The asset to be transferred is a house property. In 54, you have to transfer house property. 54F, you have to transfer any long-term capital asset other than a. Why other than a house property? Because it will, if you transfer house property, it will come into 54. Transfer house property will come into 54. What you need to acquire is a house property. What you need to acquire is a house property. But yes, if you go into 54, you go into 54, they're giving you a special benefit. They're coming and saying you can acquire 2 house properties. You can acquire 2 house properties, provided your capital gains does not go beyond 2 crores. Capital gains does not go beyond 2 crores. You can acquire 2 house properties, but okay, once in a lifetime offer. Once in a lifetime offer. If you have done this once, you can never do it until you die. You can never do it until you die. After you die, anyway, you cannot do it. Okay? So it's a once in a lifetime offer. If you have 54 exemption, meaning you're transferring a house property, you can acquire 2 house properties, provided your capital gains is not more than. Where have you seen this number? We have learned this 2 crores in presumptive taxation. We have learned this 2 crores in presumptive taxation. Basically, where you see weird numbers, no, keep a track where and all you have learned it, so that you have a proper check. Where have we learned 50 lakhs? One more. Surcharge. One more. Tax audit also, no? Okay, tax audit panadhika pradhana presumptive. Tax audit panadhika pradhana presumptive. Yes or no? Where have we learned 1 crore? Tax audit. Then turnover. Yengada pata. He got the answer just as anything. Yeah. Turnover. 1 crore is true. Turnover 1 crore is true. Where have you learned this? TDS chapter. இப்போதானே படிச்சோம். PGBP பண்ணும்போது last year turnover 1 crore க்கு மேல இருக்கணும். Yes. One more place where you learned is surcharge. Place where you learned is, where have you learned 50,000? Where have you learned 5,000? 5,000. Giftless salary. Salary is gift. Where have you learned 50,000? You have learned it in IFOS and standard. Where have you learned 2014? Where have you learned 2001? 1999? 2012? அப்படின்னு ஒரு டேட் இருக்கா? ADC. நான் சொல்லி தரல, அதனால தெரியாது. கரெக்ட். ADC. Yes, ADC chapter 6. Good. If you can remember these many bits and all, no, they're already through for the exam, except for that 115 BS. அது தவிர எல்லாத்துமே வருது, கரெக்டா வருது. Okay. Anyway, coming back to this provisions, we are into section 54, where we came and said, boss, if you're transferring a house property, acquiring another house property, you can acquire 2 house properties, provided your capital gains is less than 2 crores, and it's a one-time offer. What you should invest in 54, you should invest your capital gains. Before you should invest your capital gains. In 54F, you should invest your long-term net consideration. What should you invest? Okay, 54 you should invest your capital gains. In 54F you should invest your net consideration. Meaning, let's say my capital gains is 100 rupees. Capital gains is 100 rupees. I transferred this house property and acquired another house property. I need to transfer minimum 100 to where? New property. To new property. If I did not transfer minimum 100 rupees, what will happen? Whatever I transfer is what will be given as it. Whatever I transfer will be given as an exception. But if you are into 54F, they want you to transfer the net consideration. If you transfer 500 rupees, I'll give you an exemption of 100. If you transfer 500 rupees, I'll give you an exemption of 100. I transferred only 400, Rahul. What to do? Proportionate. If you had transferred 500, you would have got 100. How much will you get if you transfer 400? Question mark. I think it's 80. Random guess, it's 80. Okay, that is what you'll get as an exemption. So in 54 you'll get an exemption if you transfer your capital gains. In 54F you'll get an exemption if you transfer your net consideration. Next thing, I had to transfer. By when should I acquire my property? They're coming and saying, if you're purchasing the property, you can acquire it 1 year before the date of transfer or 2 years after the date of transfer. within 1 year before or 2 years after. Within 1 year before or 2 years after. But if you're constructing the property, I don't care when you started. I don't care when you started. Complete the property within 3 years. Complete the property within 3 years. Same copy paste for 54F also. Copy paste for 54F. This is what the provision. This is what the provision. But I came and said, boss, I have been given time limit of 2 years to invest. 2 years to invest. But the assessing officer today itself should have a proof that I am ready to invest. For which they came and said, I'm giving you a special account called as capital gains saving scheme. Capital gains account saving scheme. They're basically coming and saying, whatever amount you want to claim as exemption, please have this money deposited into the capital gains account saving scheme before the due date of filing of return. Before the due date of filing of return. If you deposit the money within the due date of filing of return of income, I will assume that it is for the purpose of the house, and therefore I will give an exemption. Therefore, I'll give an exemption. Ilana, I will not give any exemption. I will not give any exemption to you. Rahul, I deposited money in CGAS scheme. I deposited the money in CGAS, but then tomorrow I withdrew it and I used it for the purpose of issuing dividends. Have I violated conditions? The year in which I violate conditions, that year will be taxable. The year in which I violate the conditions, the year it will become taxable. Rahul, if you had a problem with that, what I will do is 2 years you gave me time limit. No, 2 years I deposited the money, never used it itself. Never used it itself. 2 years over. Now what? Third year it will become taxable. Third year it will become taxable. They'll come and say 2 years I gave you time limit, you did not utilize. Third year I will tax it. If it is construction, it will become taxable in fourth year. Become taxable in clear, not clear. Here, this is what the provisions are. Okay, Rahul, I bought a house. I bought a house. Tomorrow itself I sold it off. Tomorrow itself I sold it off. They said, no, boss. If you are having a house property which you bought, please have the property for a period of 3 years. Please have the property for a period of 3 years. If you don't have the property for a period of 3 years, I have a problem. I have a problem. What here I will do is I will check what are the nature of assets. I will check what are the nature of assets. In 54, I sold a HP, I bought HP. Same asset, different asset. Whatever exemption you claimed earlier, reduce it from the cost of the asset. Whatever exemption you claimed earlier, reduce it from the cost of the asset. 54F, I transferred anything other than HP, bought HP. Same asset, different asset. Tax HP separately, tax the other asset separately. Tax the HP separately, tax the other asset separately. Rule is very simple. If the assets are the same, reduce it from the cost. If the assets are different, tax it differently. Okay. Special provision in 54, if they're coming and saying, boss, at any given point of time, if you already have one property, you can have a second property. If you're already having two properties, no more exemptions. No exemptions for you. Meaning, you cannot purchase the third property. You cannot purchase a third property. Kaila erkanve rendu property irukana, no more exemptions. As long as you have one property, you can take the second property. You have no property, you can buy one property. But if you already have two properties, no more properties allowed for you. No exemptions will be granted. Clear? Not clear? Clear? This is your 54 and 54. Any doubts in it? No? Take a minute. Go through the respective materials which you have and see if you understand. Investment should be done for only one resident. Yes. No two properties condition. Even if I have no property. If you have no properties, you can invest in one property right now. You have one property, you can invest in one property right now. You have two properties, no more investment. Go through your respective books and tell me if you understand. So you shared the material in drive for May 23, including amendments or not. Dema. If I'm taking a fast track for May 23, the amendment will be there in the book only. I will not give you an old material. Upload seating enough. Whenever you read 54 and 54F, keep it parallelly and read it. Keep it parallelly and read it. It's all the same provisions except for some places so that you understand better. Benefits of the talking tutorial. I will add it after the capital gain breach now, and the talking period that they have transferred to within 3 years. You will tax it separately. Whatever is your new house property, that will be taxed separately. Whatever is the old property on which you claimed exemption, that will be taxed separately. Done, everyone? Yes. Coming to the next section called as 54 EC. Fairly easy. Okay, 54 easy, not easy, EC. Yes, 54 EC, the provisions are basically coming and saying that, boss, I am going to transfer a land and building right now. What am I going to transfer? It is not a house property anymore, but it's somewhat similar to house property. Somewhat similar to house property. I need to transfer a land and a building right now, which should be long term in nature. Which should be long term in nature. And when what I'm acquiring is this time I'm acquiring some bonds. I'm acquiring bonds. I'm going to acquire the bonds of NHAI, REC, or any notified bonds. NHAI, REC, or any notified bonds. What should I invest? I should invest my capital gains again. Same as 54. Same as 54. I should invest my capital. I should invest my capital gain, same as 54. How much is the exemption I can get, Rahul? Whatever you invest, you will be given as an exemption. But there is an overall limit of 50 lakh rupees. Overall limit of 50 lakh. Have we learned this number before? Where have we learned 50 lakhs? Business. Profession. Profession presumptive. Profession tax audit. This is the third item. This is the third item where you are learning. Okay. So if you are into 54 EC, you can claim an exemption of up to 50 lakh rupees maximum. 50 lakh rupees maximum. This 50 lakh rupees is per asset per year. Per asset per year. What do I mean by per asset is basically coming and saying is, Rahul, if you have sold a land and building today, you have sold a land and building today, and the gains on that is 60 lakhs. Gain on that is 60 lakhs. I will have an option. Let's say, for example, I invest 30 lakhs today, 30 lakhs next year. 30 lakhs today, 30 lakhs next year. Can I claim an exemption of 60? I can claim an exemption of only 50. Claim an exemption of 50. Alternate number 2. Current year, I sold 2 lands. I sold 2 lands. Both the lands are 50 lakhs, 50 lakhs. Can I invest 50 lakhs, 50 lakhs, claim both the exemptions? No. Again, 50 lakhs for the whole year. So it is 50 lakhs per asset and for the whole year. And for the whole year, FT பார்த்தாலும் ஒரு வருஷத்துக்கு 50 lakhs க்கு மேல போக கூடாது. ஒரு வருஷத்துக்கு மேல 50 lakhs க்கு மேல போக கூடாது. And if an asset on which you have already claimed an exemption, next year you cannot claim it again beyond 50 lakhs. Next year you cannot claim it again over 50 lakhs. Clear? Clear? So it is 50 lakhs for the year and for that asset. For the year and for that. That is what the provisions are. When should I invest, Rahul? I should invest within 6 months from the date of transfer. There I should invest where 1 year before, 2 years after, 3 years. Here it is 6 months. Within 6 months from the date of transfer, I need to make that investment. If I'm going to make the investment within 6 months, do I have to opt for CGA scheme? Because due date of return filing itself will come after 6 months only. Will come after 6 months only. So CGA scheme not applicable. CGA scheme not applicable. So the provisions are coming and saying transfer a land and building, acquire a bond. The bond should be acquired within 6 months, and the amount of exemption can be maximum capital gains or 50 lakhs. Capital gains or 50 lakhs. Whatever bond you hold in your hand should be held for a period of 5 years. For a period of 5 years. Rahul, I did not hold it for 5 years. I did not hold it for 5 years. What is the rule? Check for the asset. The asset which you transferred is land and building. The asset which you are selling is a bond. Same asset, different asset. What will you do? Tax separately. What will you do? Tax separately. So tax the bond separately, tax the asset. Tax the asset. This is what the provision. Clear? Yes. all the provisions, there is one exception given. They're coming and saying, boss, if any of these provisions are pertaining to compulsory acquisition, pertaining to, they're giving you a benefit where they're coming and saying, boss, you can start the investment from the date on which you receive the money. Because the taxability has to happen in the year of transfer itself. But the payment of tax is only going to happen in the year of transferability. In this scenario, I will not have money in my hand itself to invest. So they said, boss, no problem. Let the date start from the date on which the money is received. Within 6 months from the date on which the money is received, or within 6 months from the date on which you sold the property. HP cases, you will buy it from 1 year, 2 years from the date on which you receive the. Clear, not clear? Clear? This is the exemption which you need to know for exam 54, 54F and 54. Rahul, what to do over the balance 2? What to do about the balance 2? Read the question, use your head. Read the question, use your head. If the question somewhere comes and says that an asset has been transferred, what have you done? You have transferred an asset. Technically speaking, that's where the question should stop. That's where the question should stop, because then you should compute capital gains. But Mottia, if the question comes and says, boss, there is some purchase which is happening. Exemption it's on. It's on. Yes. If the question somewhere comes and says an asset is transferred, you know capital gains is coming. And subsequently the question comes and says another asset is bought. Check whether the asset is HP. If it is so, you will go for 54 and 54F. If the asset is bond, you will go for 54. If it is not any of the two, give it an exemption directly. That's all. Exemption under capital gain. Take the number, put it off. That's all. Take the number, directly put it as exemption under capital gains. Answer is over. Yes. What are the kind of assets which we are discussing, Rahul? We are discussing about 54B. Talks about agricultural land to agricultural land. 54D talks about industrial undertaking to industrial undertaking. If my memory serves right, 54D came for your exam in 2018 or 20. I don't remember. But that was the first time it came in the last 10 years. That was the last time it came in the last 10 years. Never tested. Never tested. One day suddenly they'll feel bad. They'll suddenly put it on your paper. That's all it will happen. Okay. All those days you just have to act smart. That's all. What will you do? What will you do? Understand if there is any purchase happening. If the purchase is not a house property, it is an exemption. That's all. Exemption. Clear? Yes. Yes. This is how you have to remember. And again, the logics of the same will apply. 1 year before, 2 years after. Look at the asset, Look at the asset. If it's a bond, what will you do? 6 months. If it is any other big asset, you'll do 1 year before, 2 years after. If you are going to violate the condition, check whether the same nature na reduce from the cost, not same nature. So 54B is land to land, same asset, different asset. What will you do? Reduce from the cost. Second one is what? Industrial land and building, industrial land and building. What will you do? Clear? Logic புரிஞ்சா எல்லாமே வந்துரும். Okay, you just need to remember the logic. Everything else will automatically fall into place. எவ்வளோ தலை போட்டாலும் கடைசியில பேர் தான் ஆக போகுது. Yes, it is not about your hard work. It is more about your. And can you go forward? This marks the end of your exemptions also. This marks the end of your exemptions also. Comes and arrives at your net capital gains. Comes and arrives at your net capital gains. Now we need to understand what kind of capital gains we have and what kind of tax rates we have. We have capital gains of 4. One is called as long term under 112A, long term under 112, short term under 111A, and short term under others. If it is a 112A, it is 10% in excess of 1 lakh. If it is 112, it is 20%. 111A, it is, and the others are average. Rebate is allowable on. Rebate is allowable on everything except 112A. Surcharges maximum of on what? Except STCG? Except STCG others, everything else is having a maximum surcharge of 15. STCG other surcharge is 37 also. 37 also. Yes or no? You have a basic exemption limit. Can you set off your capital gains? Only to the extent of. Only if you are a resident. Only if you are a resident. You have unexplained income. Can you set off against basic exemption limit? You have an unexplained income. Can you set off against a basic exemption limit? You have unexplained income. Can you claim rebate?
Yes, sir.
Wonderful people. If you are able to remember that much, great. Okay. Now let's understand what are our assets. What are our assets? 112A and 111A are the same assets. 112A and 111A are the same assets. Provisions are basically coming and saying if you have a listed equity shares, understand. When we did 12 months, we told it is listed securities. Now we are telling it is listed equity shares. If you have a listed preference share, your period of holding will be listed preference shares. Period of holding is 12 months. But tax will happen under 112. A listed preference, period of holding will be 12 months, but the tax will happen under 112. Listed equity, period of holding will be 12 months, tax will happen under 112A. Understand what the assets are. Understand what the assets are. You are in 112A. 112A comes and says, I'm giving you three kinds of assets. I'm giving you three kinds of assets. Number one is listed equity shares. Asset is 12 months. Equity oriented fund. Asset period of holding is 12 months. Business trust unit. You have never heard it before, it's 36. You have never heard it before, it is 30. Clear? Clear? Come to the right side. Other listed securities, 12 months. Zero coupon bonds, 12 months. Zero coupon bonds is 12 months. Unlisted shares, unlisted securities, other assets. Immobile in the 24. Immobile is 24, others are 36. Immobile is 24, others are 36. Understand your period of holding with your taxability. Okay. We are in 112A where it comes and says if you have a listed equity shares or a equity oriented fund or a business trust unit, you can claim a tax of 10% in excess of 1 lakh rupees. 10% in excess of 1 lakh rupees. If it is any kind of non-listed, other listed securities or any kind of zero coupon bonds, it will go at 20% 112. 20% 112. If it is unlisted securities and unlisted shares, it will go 20% 112. If it is any other asset, it will go 20% 112. Some places you will see this 10% without indexation, this without claiming 10%. Final level portion. Final level portion, not relevant for exam. Unnoda exam portha varaikum, it is 10% or 20%. 10% for 112A, 20% for balance. 20% for balance. You have a special provision when it comes to 112A. Have a special provision when it comes to 112A. Here is where we bring in the new date. The new date is 31st January 2018. Using a new date for you, it is called 31st January 2018. Basically, the provisions are coming and saying, boss, if you have acquired your asset, which is taxable under 112A, taxable under 112A, before 1st February 2018. Before 1st February 2018. Technically 31st January. Technically 31st January and before. If you have acquired an asset in that, you have a special cost of acquisition methodology. You have a special cost of acquisition methodology. Provisions come and say, compare your actual consideration or FMB as on 31st January 2018, whichever is lower. Whichever is lower. The answer of this will be compared with your actual cost, whichever is higher. Okay. The provisions are basically coming and saying, check your actual consideration with your FMB as on 2018, compare whichever is lower. That will be checked with your actual cost, whichever is higher. This new number will become your cost of acquisition. This new number will become your cost of acquisition. From this, you will take your sale consideration, you will remove, you will arrive at a capital. You will arrive at your clear, not clear. Clear? This is what the provision says. Second provision, they are coming and saying when it comes to 112A, no indexation benefit for you. No indexation benefit for you, meaning you directly tax it at 10% in excess of 1 lakh rupees without providing any kind of indexation. Without providing any kind of clear till here. Yes, two special provisions for you. First provision, indexation not allowed. Second provision, actual cost of acquisition will be determined if it is before 2018. Will be determined if it is before 2018, where you need to check the consideration versus the FMB on 2018, whichever is lower, with the actual cost, whichever is higher. Rahul, I purchased asset after 2018. Directly take the actual cost. Directly take the actual cost. What do you mean by FMB? What do you mean by FMB? They're coming and saying, tell me whether it is an mutual fund or is it a share? whether it is a mutual fund, if it is a share. If it is a share, take the highest value. Take the highest value as on 31st January 2018. Take the highest value as on 31st January 2018. Rahul, my share was not listed on 31st January 2018. What to do? What to do? Check if it was listed earlier. Check if it was listed earlier. If it was listed earlier, take that highest value. Take that highest value. Rahul, my share is not listed at all. My share is not listed at all. You need to determine what FMV. Determine what? FMV will be equal to indexed value of the actual cost. Indexed value of the actual cost. What do you mean by indexed value? Your actual cost is there. Multiply by CII in the year of 2018 divided by CII in the year of acquisition. I want to understand what is my FMV. Income tax comes and says, I know better what is the FMV. I can itself tell you what is the FMV by doing the indexation on it. If it is an unlisted share, index it off. If it is a listed share, take the highest value. Take the highest. Rahul, it is not a share. It is not a share. It is a mutual fund. What mutual fund? Equity oriented mutual fund. If it is listed, same highest value. It is not listed. Take the NAV. Next. Annual value, asset value. Net annual value, asset value. Asset value. Net annual value, HP ma. Here in mutual funds right now. FM planning net asset value dana padichirupeenga. Net asset value. Net asset value of the mutual fund as on clear. Yes, Rahul, I have a short-term capital gains. Under 1 month money. Same asset. Short-term capital gains under 1 month money. Can I use the benefit of 31st January 2018? Can I use the benefit? No. Why? If it is short-term, technically the asset would have been bought last 12 months before. You are in 2020. You are in 22-23. Latest it would have been bought is 21-22. Will you change? Therefore, it will be actual cost. Okay? Clear? Yes, this is what the provisions are for your capital gain. What your provisions are for a capital gain. Any doubts? No doubts? Sure. This marks the end of the chapter. 112A. No indexation benefit allowed. No rebate under 87A allowed. Exemption, this is okay. This is your cost of acquisition formula which we discussed just now. 111A, your benefit of 87A allowed, not allowed? Allowed. Rebate is allowed under 111A. Some examples for you to go through, you can do it at your home. 112, you'll have a tax rate of 20%. This you can ignore. This is your special provisions which we are discussing. Basic exemption limit set off panna mudiyama mudiyada. Surcharge vandittu eppadi compute agum. Examples for you to do. These are your comparison of your period of holding along with the tax rate. Just a summary. And then here I would have told what are the cases where indexation will not allow. First is your short-term capital gains. Then is your depreciation asset. Then is your 112A. Then you have something called a slump sale. Balance items ignore. So short-term depreciation, slump sale, 112A. Okay. Ignore. No valuation officer and all, for example. Done. This marks the end of your capital gains. We have 2 more chapters to do called as business reorganization and distribution of companies or by companies. Distribution by companies to its owners. I'm going to take exactly 10 minutes. We'll be done in that. We are exactly 10 minutes doing the balance 2 chapters. First chapter called as business reorganization. Chapter called as, we're doing some high level M&A here. High level M&A here. What is the kind of M&As we can do? We'll do amalgamation, demerger, slum sale. Amalgamation, demerger, and slum sale. Income tax Puerto Rico. Amalgamation means amalgamation same as accounts. Amalgamation same as which accounts? You have two amalgamation. One is in the nature of purchase, the other in the nature of merger. Income tax does not recognize purchase, it recognizes merger. So income tax Puerto Rico, amalgamation means amalgamation in the nature of merger. Copy paste provisions. I will not teach you, discuss from your accounts faculty. Discuss from your accounts faculty. I will teach you income tax. I will teach you income tax. Income tax comes and says amalgamation in the not taxable. Income tax Puerto Rico, amalgamation is not taxable. And I told you if something is not taxable in capital gains, cost of acquisition for the new company will be cost to the previous company. Period of holding for the new company will be period of holding of the old company. Indexation will be from your choice. Your choice. My preference, current company. My preference, current company. But in amalgamation, two people are involved. One is the company is changing, then other the shares are also changing. Yes or no? The other the shares are also changing. So they came and said, boss, shareholder Puerto Rico, shares of the new company will be shares of the old company. Cost of acquisition of the shares of new company is cost of acquisition of shares of old company. Period of holding of the new company is starting from the period of holding of old company. Indexation of the new shares will start from your choice. Your choice. This is for amalgamation. Next comes demerger. Demerger na enna artham? One company splitting into two companies. Same provisions as accounts. Same provisions as accounts. Income tax comes and says not taxable. Income tax comes and says not taxable. So demerger la vaangana the assets. Cost of acquisition of the assets acquired by the resulting company will be the cost of acquisition of the assets at the time it was on demerger. Period of holding of the assets held by resulting company will start from the period of holding from the old company. Indexation for the assets of the new company will depend on your choice. Will depend on choice. Done. Done. Shareholders of the old company will now get shares of new company. So cost of acquisition of the shares of the new company will be proportionated. Proportionated. Please understand, people. This shareholder initially bought a share for 100 rupees. Initially bought a share for 100 rupees. Now they've entered into a demerger, which means the assets of one company has gone into two companies. Which means now he will have two shares. He'll have two shares. He wants to know the cost of the new share. What will he do? He'll come and say, boss, old company net worth was 5,000 crores. Old company net worth was 5,000 crores. In this, 2,500 crores went to new company. 2,500 crores is there with the old company. I bought the shares when the net worth was 5,000 crores. I bought it for 100 rupees. For me, the cost of the new company shares will be what? 50. What did you do? You proportionated. What will be the cost of the old company shares after demerger? 50. எப்படி கண்டுபிடிச்ச மொத்தம் 100 இருந்தது 50 அங்க போச்சு மிச்ச 50 தான் என்கிட்ட இருக்கு கரெக்ட்டா கரெக்ட்டா லாஜிக்மா மூளை யூஸ் பண்ணா வந்துரும் okay cost of acquisition of the resulting company shares are cost of acquisition of the old company shares into the assets transferred to the new company divided by the net worth of the full company before demerger. Cost of acquisition of the shares of the old company after demerger is cost of acquisition originally there minus the cost of acquisition of the resulting company transferred off. Nyamog in the great. Nyamog exam la varamat. It's not coming in exam. Inda naladam. இல்லனாலும் ஒன்னும் பிரச்சனை இல்ல. It will maximum come as an MCQ question. ஒரு மார்க் விட்டு போயிடலாம். Your choice. My honest thought, this is a very easy question. You can easily score that 1 mark. Easily score that 1 mark. But is it going to be tested? I don't know. My likelihood not going to be tested. My likelihood not going to be tested. In the chapter the most important is slum sale. Chapter most important is slum sale. We are into the last leg of this chapter called as slum sale. Provisions are basically coming and saying that, boss, if you are going to transfer your business, you're going to transfer your business without assigning a value to each asset. Without assigning a value to each asset, this will be called as a slum sale. It will be called as a slum sale. What is the format of capital gains? Full value of consideration this is the format. Use the same format for slum sale. Use the same format for slum sale. Full value of consideration, they're coming and saying actual consideration. Actual consideration or FMV of assets transferred, whichever is higher. Lower pana, you'll cheat the government. Lower pana, you cheat the government. This is same as 50 CA. Same as 50 CA. Whatever is the consideration which you are receiving, please ensure that it is at least FMV. If it is not FMV, I will assume FMV. Not, I will assume FMV. Clear up? This is your full value of consideration. Cost of transfer is cost of transfer. Net consideration will automatically come. Cost of acquisition. You are going to transfer your business, meaning business will have assets, liabilities. Cost of acquisition is nothing but net worth of the company. Net worth of the company. Net worth of the company is nothing but asset minus liability. Asset minus liability. Tell me what are the assets you have. Balance sheet. Balance sheet. Right side is. Left side is. Left side. Right side. What will come? Fixed assets. Fixed assets. You can have two kinds of assets: depreciable assets, non-depreciable assets. Depreciable assets. You are doing income tax accounts. Are you doing income tax or accounts? Income tax. Income tax, depreciable assets. WDV income tax will tell or accounts will tell? Non-depreciable assets. Actual cost. Non-depreciable asset. Actual cost. Rahul, I bought a land for 1 crore. I bought a land for 1 crore. Accounts is good to me. Accounts tell you revalue to 1.5 crores. Accounts told you revalue to 1.5 crores. I am in income tax. Cost will be. Accounts alone is stupid. Account and all is stupid. Income tax knows better. Income tax tells 1 crore. Answer is actual cost. Ignoring revaluation. Actual cost. Ignoring revaluation. Clear. Next. After fixed assets. Current assets. What is current assets? நீ கம்ப்யூட் பண்ண முடியுமா? முடியாது. அப்போ என்ன பண்ணணும்? Actual cost. இது போச்சு கதை. Come to the left side. What do you have first? Capital. Are you going to transfer capital? Hey, are you going to transfer capital? No. What are you going to transfer? Asset minus liabilities. Ignore. Next. Hey. Reserve and surplus. Are you going to transfer R&S? No. Ignore. Next. Non-current liabilities. Can you compute? What to do? Actual. Then current liabilities. Can you compute? Answer. So you compute your net worth. This is how you compute your net worth. Rahul, I have something called goodwill in my books. I have something called goodwill in my books. What to do? If it is self-generated, the only one place which can do is accounts. Accounts, I don't care, so therefore 0. If it is purchased, take the cost. If it's purchased, take the cost. If it is not purchased, generated, ignore the cost. That's all his answer. Okay. Normal human being, what he will do is what you need to do. That's all his answer. Clear? Yes, your net worth is common. Net worth is asset minus liability. Take your depreciable asset at the WDV of Income Tax Act, non-depreciable asset at the actual cost, ignoring the revaluation. Then balance everything will be actual cost. Balance everything will be actual cost. This will arrive at your net worth. Cost of improvement not applicable. Cost of improvement. Answer is CG. Question to you. You can either have STCG or LTCG. Basis what? Period of holding. Basis of what period of holding? What is your start date? Date of Incorporation of slum sale. I'm sorry, business. Date of incorporation of business. Simple as that. Date of incorporation of business. That's all. Rahul, I incorporated my business in 2006. I incorporated my business in 2006 with 5 assets. All the 5 assets I sold off. All the 5 assets I sold off. Today in 2022, I have purchased 10 new assets. I purchased 10 new assets and then I have sold this slump sale. I've done this slump sale. My period of holding will start from it will start from 6. I don't care what assets you purchase. I don't care what assets you purchase. Okay? Because the whole criteria itself I told you is that slump sale is happening on a transfer of asset or liabilities, ignoring any specific assets. Ignoring any specific assets, where you are getting the value for the assets, ignoring the any specific asset. Business yes, if you're going to get the consideration for the whole business, I don't care what movement happens in the business. I only care when the business was incorporated. Business was incorporated in 2006. This asset will become a long-term asset. Rahul, it's a long-term asset. Can I claim indexation? Indexation. Cost of acquisition. What is cost of acquisition? Net worth. Net worth is today's or that day's. On today's date, can I indexation? Correct? No indexation. Done. Chapter is over. Done. Last chapter called as distribution to owners by company. Distribution to owners by company. There is only one provision in this. I think there is only one provision in this. We have from partnership firm has been removed from syllabus. Partnership firm has been removed from syllabus, has gone to finals. So the only thing which is there for your syllabus is company. Company can distribute what and all? Dividend. We learned under. Next, buyback. Income tax comes and says, boss, if there is a buyback happening, please check whether it is for a share or a security. Share or a security. Shares in the buyback, securities in the capital gains. Securities in the capital gains. Debentures align the, you'll go back to capital gains. The old provisions we did know on the cost of acquisition, capital asset, etc. When it comes to shares is when I'm talking right now. We have a new concept called as, not a new concept, but okay, a concept called as BBT. Buyback tax. What do we call it as? Buyback tax. Provisions come and say if there is a buyback happening from the company to its shareholders. If a buyback is happening from the company to its shareholders, whatever is the capital gains for the shareholders, company will pay buyback tax. Whatever is the capital gains for the shareholders, company will pay buyback tax. How will you compute the capital gains for shareholders? Consideration minus cost of acquisition. What is consideration? Buyback price. What is cost of acquisition? Issue price. Buyback price minus issue price will be the income for shareholder. On this, who will pay tax? Company will pay tax. Buyback. Yes. What is the tax rate for a normal LTCG? 20. What is the maximum surcharge rate for a company? 12. What is the maximum cess on a company? 4. This is the tax rate. 36%. 12% is on 20%, 4% is on both. Number will come as 23. MCQ question. MCQ question for your exam. In the MCQ question, if the exam comes and says, boss, the buyback price is 100. Issue price was 20. Compute the buyback tax to be paid by the company. What will you do? 80 into 23.296 number. Sorry, 80 now. 1000 எங்கேயுமே வந்துச்சு உனக்கு? 2 decimals. 64. It's not her mistake, ma. When I talk in the class now, I generally say when I say 100, it means 100 crores. When we talk in our classes, no, we So நாங்க பேசுறது 100னா 100 crores தான் நாங்க பேசணும். 0 போட தெரியல அதனால 100 போட்டுன்னு இருக்கோம், அவ்வளவுதான். அதான் டிஃபரன்ஸ். சரியா? எஸ். crores எவ்வளவு 0 வரும்னு தெரியாதா? பார்த்ததே இல்லைங்க. Yes, yes. Basically, the provisions are coming and saying if there is any buyback happening, the buyback tax will be paid by the company. At what rate? 20 plus 12 plus 4. 20 plus 12 plus 4. This will become exempt in the hands of shareholder. Will become exempt in the hands of shareholder. Third kind of distribution is called as liquidation. Third kind of distribution is called as liquidation. If you recall liquidation, we told we had discussed somewhere else, and I told I'll come back to capital gains and discuss. That was under dividends chapter. That was under dividends chapter. Income tax is basically coming and saying, boss, if the shareholder is receiving any money on account of liquidation, the shareholder is receiving any money on account of liquidation. For example, he receives 50 lakh rupees. He receives 50 lakh rupees. I will first go and ask the company, tell me, boss, how much is the profits left in your company? How much is the profits left in your company? When can I check the balance sheet of the company? I found out that the reserve and surplus of the company is showing 20 lakhs. I went and I checked my company is showing a profit of 20 lakhs. I will come and say, boss, 50 lakhs, technically speaking, 20 lakhs is my profit which you have given from your company to me. This is nothing but dividends. This is nothing but dividends. To the extent of the accumulated profits of the company, that money will become dividends in the hands of shareholder, will be taxable under the head. The balance 30 lakhs will be your full value of consideration. The balance 30 lakhs will be your full value of consideration. In this, you will reduce your cost of acquisition of what? Shares minus cost of improvement of shares. Get the number. It will become your capital gains. This is what liquidation. This is what liquidation says. Rahul, how did you arrive at this 50 lakhs? How did you arrive at this 50 lakhs? Is it possible that the company will always give you money only? They can give you assets also. They can give you assets also. What they are coming and saying, boss, whatever money you got, take it directly. Take it directly. For assets, you don't know how to value. You will value it at. You don't know how to value the assets. Asset value that fair market value. Hey, income tax for the account 2 only are there. FMV, SDV. Immovable in the SDV. Movable in the. With this, your capital gains is done. With this, your capital gains is also done. Nothing further for me to discuss. Any doubts? 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 Can we do sums? I'm definitely not completing the whole capital gains today. So we will do some sums balance for tomorrow after you forget. I will do the easy sums today. All easy we will do today. Okay, all easy we'll do today. Tough I will leave for tomorrow. After you forget, we'll come back and do it again. Sorry, na? Paaklama. Naalik paapom. Naalik paapom. Naalik paapom. We'll see how much you forget and how much you don't forget. Shall we? Shall we? Yes. Look at question number 1. In which of the following situations will capital gains tax not arise? Capital gains tax not arise. Mr. A has purchased gold in 1971 for 25,000. In 22-23, he gifted it to his son at the time of his marriage. Fair market value of the gold on the date of the gift is given as 1 lakh rupees. Taxable, not taxable? Gift vandirukku. Taxable. Second one. A house property is purchased by a Hindu undivided family in 1946 for 20,000 rupees. It is given to one of the family members in 22-23 at the time of partition of the family. Same family, different family. You want to tax it, don't tax it. Tax. Your choice, ma. You are the tax people. Mr. B purchased 50 convertible debentures for 40,000 in 1996, converted them into 500 shares worth 85,000 in 2022. Same shares, different shares. I'm sorry, same asset, different asset. Same asset. Debentures has become shares. That's all. No change. Do you want to tax it on the date of conversion? Sure. Okay, let's no tax. Done. என்ன ஒர்க் ஆகுதுடா அது வரும் on the way நாங்க இன்னும் கொஞ்சம் ஃபாஸ்டா போயிட்டு இருக்கோம் வேற ஒண்ணும் எஸ் am I going fast கிளம்பணுமா Mrs. Mahalakshmi is of the age 68 years is of the age அப்படின்னா has mortgaged the residential property purchased for 3 lakh rupees on 1st October 2006. She purchased the property for 33 lakhs in 2006. Has mortgaged this with a bank under a reverse mortgage scheme, which has sanctioned a loan of 20 lakh rupees. Relevant, not relevant? Not relevant. As per the said scheme, she was receiving the loan amount in monthly equal installments of 30,000 per month. Relevant, not relevant? This is only exempt from tax. Only exempt from. Mrs. Mahalakshmi was not able to repay the loan on maturity and in lieu of the settlement of the loan, surrendered the property to the bank. Bank sold the property for 25 lakhs on 22/2/2023. Relevant, not relevant? 11. She had no other income during the year. You're required to discuss the tax consequences. Look at all the numbers. Look. Number? எப்படி கண்டுபிடிச்ச இண்டெக்ஸேஷன் நான் போடணுமா Yes, look at all the numbers and discuss the tax consequences first. Starting from the 20 lakhs, this is the money given to him. Her. This is the money given to her on transfer of the property under reverse mortgage will not be taxable under capital gains. Next, she received money of 30,000 rupees will become exempt from tax under section 10. Section 10. Next is the transaction where you're receiving a sale value and you have a cost. Let's understand what is the sale value. Sale value is given as 25 lakh rupees. So full value of consideration is அந்த இன்விசிபிள் லிங்க் சொல்லுவாங்கல this is reverse invisible link first invisible இருக்கும் அதுக்கு அப்புறம் திடீர்னு வந்துரும் yeah full value of consideration is given as 25 lakhs you don't have a cost of transfer therefore this becomes a net consideration you have a cost of acquisition can you take the cost of acquisition directly as 3 lakhs 5 lakhs சொன்னே நீ இங்கிருந்து மாட்டாங்க 20 ல இருந்து எடுக்க சரி கான்ஃபிடென்ட்டா ஏதோ தப்பா சொல்லிருக்காங்க yes your cost of acquisition is 3 lakh rupees because you purchased the asset in 2006 your period of holding is more than 24 months this becomes a long term capital asset eligible for indexation rates are given to you current year rate is given as 331 last year rate is given as 122 what will you do 3 lakhs into 331 divided by 122 number is 81393.4 is for you to have now 813924 remove the number get me a long term capital gain 0 she has no other income during the year. This number is nothing but your total income. Will have to be rounded off to the nearest. Can you compute the tax? For those who are thinking 115 BSc will come, there is only one income. Quickly, Ma, we're out of time. Compute the tax. Huh? 2 lakh? 4? 54. Hey, 10 seconds answer, Ma. That's all. Got a call from home also. Come fast, quickly. Yes. How do you approach the question? Adhe poru. How do you approach the question? 16 lakhs is your total income. This fully is pertaining to LTCG. Tax rate on this is 20%. Take the number, multiply by 20. Correct? No. With no other income for you, 3 lakhs of basic exemption limit will be exhausted. Resident senior citizen has a basic exemption limit not utilized. Therefore, you will utilize the basic exemption limit. Number becomes 13 lakhs 86,070 into 20%. Number is 1 4. Add says 300. We just discuss people. Let's not make these kind of mistakes. Careful. Next question. A is the owner of a car. On 1st April 2022, he starts a business of purchase and sale of motor car. He treats the above car as a part of the stock in trade of his new business. He sells the same on 31st March 2023 and gets a profit of 1 lakh rupees. You are required to discuss the tax implications in the hands of A under the head capital gains. Where are we? Now, the capital gains what are the tax implications? There are no numbers given, so I want theory. What is the theory? Yes, people. Very good. What is the asset being sold? Personal car or business car? Personal car. The asset you sold is a personal car. Does not fall within the bracket of the personal movable effects. Capital gains will be 0. It's always fun, when my own students make the same kind of mistakes again and again. Yes, personal movable effect asset. Because the question itself very clearly comes and says that he was the owner of the car and then he brought it into his business, which means technically it was his personal asset before. When it was his personal asset before, capital gains on that would have been 0. Yeah. Next question to be discussed tomorrow. Last question. Last question. Balance we'll discuss tomorrow. Yeah, balance we'll discuss tomorrow. Okay, last question. Mr. Mithun purchased 100 equity shares of Good Money Company Limited on 1st April 2006 at the rate of 1000 per share in public issue of the company by paying securities transaction tax. Company allotted bonus shares in the ratio of 1:1 on 1st December 2021. He also received a dividend of 10 per share on 1st May 2022. He originally had some shares. On that shares, he is now received bonus in the year 2021. He also received dividend of 10 per share on 1/5/2022. Your previous year, previous year. Or previous year will be taxable under the head amount to be taxed. 2000. You had 100 shares earlier, 100 shares as bonus, 200 shares at the rate of 10 per share. Number is 2000. He sold all the shares which he had on 1st October 2022 at the rate of 4,000. At the rate of 4,000 per share through a recognized stock exchange and paid brokerage of 1% and securities transaction tax of 0.02% to celebrate his. Enough? Senior citizen. You are required to compute his total income and tax liability, assuming there is no other income other than the above. Fair market value of the asset is given as 2000 as on 2018. You have two kinds of shares, people. One is your original shares, one is your bonus shares. Let's look at the format. Format is full value of consideration. What is the full value of consideration? 4,000 into 100 for bonus, 4,000 into 100 for original. So what is the number? 4 lakhs each. Correct? Less cost of transfer. What is the cost of transfer? Only the brokerage of 1%. Securities transaction tax will be ignored. From capital gains perspective, STT is not allowed as a deduction because you are getting the benefit of 112A. Because you're getting the benefit of 112A, STT is not allowed as a deduction. Only brokerage will be given. Brokerage is 1%. Number is. Therefore, your full value net consideration is 3,96,000. The question comes and says that STT is paid on this asset, meaning these are listed securities. Therefore, the capital gains will come under section 112A. 112A. With your capital gains under 112A, will you give indexation benefit? No, you will not give indexation benefit. You need to understand the cost of acquisition. The easiest cost of acquisition is for bonus. What is the number? 0. Why? Because asset was bonus on 21. The asset was bonus on 21. You don't have a cost, therefore the cost is 0. Coming to the left side. The problem is that the asset was purchased in 2006, which means it is before 2018. Now you need to do the computation. Computation is what? FMV or actual, whichever is lower. FMV is what? 2000. Actual is what? 4,000. Actual consideration. Consideration, whichever is lower, therefore 2000. This 2000 will be compared with the actual cost, which is 1000, whichever is higher. Therefore, the number is 2000. So 2000 into 100 shares will give you 2 lakh rupees. Therefore, capital gains is 1,96,000. Capital gains is 3,96,000. Yes or no? Compute the total income and tax liability also. So 3,96,000 plus 1,96,000. How much is the total? 5,92,000. 5,92,000 is your total income because they have no other incomes. They have no other incomes. Compute the tax quickly. Oh yeah, sorry. You have a dividend of 2,000 also. I'm sorry. 5,94,000. Huh? Compute the tax. $20,000. 170. 20,180. How do you get this? Your basic exemption limit is 3 lakhs. Your basic exemption limit is 3 lakhs. With your basic exemption limit being 3 lakhs, out of this 2,000 is already utilized by dividends, which means 2,98,000 will go up from here. 5,92,000 minus 2,98,000 is 2,94,000. In this 2,94,000, you will reduce 1 lakh rupee. Number is 1,94,000. 1,94,000 into 10% will give you 19,400. Add cess 776. Cess to 77. Sorry, da. Sorry. 20,000. 1,180. Debate will come, not income 5 lakhs. Your total income is 5,94,000. Rebate will not be eligible. Rebate will not be eligible. Clear? Done. This let's end for today. We have full-fledged question. 6 is what? Depreciation question. Okay. 7 is your tax rate question. 8 is your full-fledged question. So 8, 9, 10. Okay. 8, 9, 10 are the most important questions from exam perspective. We will solve those. 11 is your 1128 question. 12 is your liquidation. 13 is your slum sale. Done. We will do all these questions tomorrow and then start with our balance miscellaneous chapters of clubbing, set of chapter 6A. We'll start with clubbing set of chapter 6A. If time permits, we'll get into AMT and 10AA also. Okay, AMT and 10AA also. I don't think I have to discuss with you 115 BSc, correct? Have we covered everything about 115 BSc till now? Hey, capital gains, there is no 115 BSc. Capital gains, there is no 115 BSc. PGBP Puerto Rico, I told only additional depreciation and the scientific research and the 35 AD. Capture Panitoma. All which is there for 35 AD. When we come to set off, I will discuss the balance of 115 BSc. Basically, we are done with 115 BSc. We will just go through it quickly when we do it tomorrow. Okay. Most likely, we'll complete all the miscellaneous chapters tomorrow. Next class, if it happens during the week or it happens on Saturday, we'll start with TDS. We'll start with TDS along with return filing provisions and then do some comprehensive questions for your exam purposes. The full-fledged question, 12 marks. Okay, we'll do some full-fledged 12 marks question. 2 I will do in class, 2 I will send as video. 2 I will send as video because I'll be taking it for the regular course students. Okay, regular course students, calm chita, I will give it back to you as video. You can watch it at your home. Basically, I'll be doing the study material questions only. Okay. Thank you, people. Have a great weekend.